Yes, people, a very, very happy to all of you. So, guys, we're doing this chapter called as cash flow statement. Wonderful. So, quick recap. What is cash flow statement, people? So, cash flow statement is first of all a statement. What does this statement do? It provides information. What information does this provide? Sir, the movement of cash inflows and as cash outflow. Movement of cash inflow and cash outflow it provides. And this cash inflow and outflow, you cannot record it just like that. You have to record in a very categorical way. So cash inflow and outflow has to be categorized under how many activities? Three activities. First is operating activity. Second is investing activities. Third is financing activities. Wonderful. And with this data, the users of the financial statement can draw some analysis out of it, can derive some information out of it, based on which the liquidity position or the solvency position of the company is being known. Easy? Okay. Cash in cash flow statement means what? Cash in hand and demand deposit with bank. Hello. Cash in hand and cash in bank nahi. Cash in hand and demand deposit with bank. Cash in hand and demand deposit with bank. Demand deposit means what? The money which is there in savings bank account, I can withdraw whenever I want. For that, I did not take any permission from bank. Same way, current account balance. And third is flexi deposit balance, which means whatever money is there in these accounts, I can withdraw it without the permission of banker. Clear this point? This is called as cash. Now, what is cash equivalent? Something which is not cash but is equivalent to cash. So it has to satisfy three conditions in order to be qualified as cash equivalent. What is the first condition? So it should be highly liquid. Means what? It should be readily be convertible into cash. First condition. Second condition, it should have a very short term maturity. Means what? From the date of acquisition, within 3 months or up to 3 months, if that can be converted into cash, then you may call such things as cash equivalent. Second condition. Third condition, the risk in change of value should not be there. There should be no risk in change of value. Means whatever amount I'm investing, the same amount I should get back. Or there should be low risk of change in value. If I'm investing 1 lakh rupees, 99,990 rupees should come back at least. So even if the change is there, should not be very significant. It should be insignificant change, which should not affect us. So if all these three conditions are satisfied, then you may call that as cash equivalent. Cash flow means what? Sir, inflow, outflow. In the operating activity, inflow, outflow. In the investing activity, inflow, outflow. In the financing activity, inflow and outflow is called as cash flow. So please tell me, if I deposit cash in the bank, will that constitute cash flow? No. Even though that is inflow and outflow from one account to another account, but both are my account, both are my pocket. So if any amount is shifting from one cash to another cash, or cash equivalent to another cash equivalent, or cash to cash equivalent, it does not constitute flow. Operating, investing, financing activities, what it is we know. Okay. As per accounting standard 3, you can prepare the cash flow statement under two methods. One is direct method, second is indirect method. When I talk about direct and indirect method, it is not the entire cash flow direct, entire cash flow indirect. Your direct and indirect is from the perspective of operating activity. So operating activity could be either prepared under direct method or indirect method. Whereas the investing activity, finance activity, we record the information directly. So by default, it is direct method. Even under indirect method, the investing and finance activity is always direct. So here when they say direct and indirect, it is from the point of view of the operating activities. Okay. As per AS3 revised, which method is more preferred method? Direct method is more preferred method. Wonderful. Is there any format that has been laid down in the AS3 like this is how you have to prepare the cash flow statement? No. They've given one example. So that example is taken as a base and people have developed that over a period of years. So can I say this was a summary? Wonderful. Then people, we started the preparation of the cash flow statement under indirect method. Under indirect method, okay, before that, tell me, how does my cash flow statement look like in the outer line perspective? Just heading wise, please tell me, what is the first heading? Cash flow from bar used in operating activity. Okay. If the answer is positive, it is cash flow from operating activity. Negative means cash flow used in operating activity. When does it becomes positive? Inflow is more, outflow is less. Positive. When does it become negative? Outflow is more, inflow is less. Have you by hearted or you know it logically? Okay. This is first part. Second part is what? Cash flow from bar used in investing activities. Positive it could be, or it could be even negative. Okay. Third one is cash flow from bar used in financing activities. Okay. This also can be positive or negative. Now, what are we supposed to do after this? What is my next step? Net increase or decrease in cash and cash equivalent. What does it mean? Set this plus this plus this. Can I call this as A, this as B, this as C? So now net is nothing but A plus B plus C. So this can be either positive or it can be negative. So this is the net difference of inflow and outflow. With this, what am I supposed to do? Add opening balance of cash and cash equivalent. If I do that, what will I get? This should automatically match to your closing cash and cash equivalent. Do you agree with me? Any problem in this? Okay. One student had asked me, sir, in the last class we were discussing this point. India did not conclude what is dividend received. It is what activity? In the financing business, interest received and dividend received is all by default operating activity. So I thought we'll be discussing at the end, but I forgot to miss this. I mean, forgot to discuss this point. So, Abhi, correct only no. For the financing company, interest and dividend received both are operating. No doubt in that. No. Now coming to the format of the cash flow statement. Which method? Indirect method. So in the indirect method, the first thing that you prepare under indirect method, the first thing that you prepare is cash flow from or used in the operating activity. Now guys, under this we have how many segments? Under this we have total 5 segments. We have totally 5 segments. Segments means what? Parts. Segment means what? Parts. Under this we have 5 parts. First part is calculation of net profit before tax and extraordinary item. That is the starting point. Now listen to me very carefully. Now I'm doing cash flow from operating activity. Okay, this is the first thing. In that, the starting point of this is nothing but net profit before tax and extraordinary item. This is my starting point. Okay, now this information can be calculated in 3 ways or can be known in 3 ways. One, it will be directly given in the question. How they will give you? They will tell you this is the net profit before tax. 3 lakh rupees is the net profit before tax and extraordinary item. Directly they'll give in question. This is one way of giving the information directly. Second, how can they give? They'll give you the entire statement of P&L. Okay. In that statement of P&L, they would have taken revenue into consideration. From that, they would have subtracted all the expenses. So and so is the PBT. Everything is directly given. That is, they would have given the P&L. In the P&L, can you take the net profit before tax and extraordinary item? Yes. So these are the 2 ways in which the information is directly given. One, statement wise given. So and so is the net profit before tax and extraordinary item. Or they'll give you the entire statement of P&L. In that you can pick and choose net profit before tax and extraordinary item. Correct? Second, forward mechanism, which is also called as top to bottom approach. In this, what will happen? They'll give you information about revenue from operation. They'll give you information about other income. They'll give you information about all the other expenses, all the expenses put together. You have to sit and prepare the P&L. So how do you prepare? So from my total income, if I minus total expenses, I get net profit before tax and extraordinary item. Correct? This is the second best option that the question can give you. Third option is what? They will neither give you information directly, nor they'll give you any information about the total income, nor total expenses. So in the first two way, you cannot do it. So what is my third way? Reverse mechanism, which is called as bottom to top approach. Correct? This is the major type of question that they can ask in the examination. Now please tell me, if I go as per bottom to top approach, what is my starting point? What is my starting point? So surplus is my starting point. Before that, let's do a quick recap of the format of the P&L. Let's do a quick recap of format of P&L. Total income, 10 lakh. All the total expenses put together, 6 lakhs. Please tell me, balance is how much? 4 lakh. And this is called as net profit before tax and extraordinary item. Total income, you know what it is? So I'm not giving the breakup. What is the breakup? Revenue from operation and other income. And total expenses, how many breakup? 7 breakup. So already schedule 3 is done. In that, you know the breakup. So do you want me to repeat one more time? Not required. Now, from this, what will we do? Sir, we will do adjustments for extraordinary and exceptional items. So add extraordinary item, which is of income or gain in nature, less extraordinary item, which is of loss and expenses in nature. So when I do that, this 4 lakh is called as what? Profit before, who said after? Profit before tax. That's all. Now, next, less provision for tax. Which year? Current year. Logic is clear or not clear? When was it discussed? Last class. Let's say it is 1 lakh rupees. Add refund of tax. Which year? Previous years. So what is this called as? 3 lakh rupees is called as profit after tax. All this where did we learn? Schedule, last class also, but before that, schedule 3. Now, next. After this, what? After this, appropriation. You have to prepare appropriation account. Now, here, appropriation account can be prepared in 2 ways. One, you can prepare the appropriation account in the statement of P&L itself. Or you can prepare the appropriation in the notes to accounts. Both we will do it. So imagine I'm doing the appropriation here. So how many items of appropriation are there? 4 items. First one is transfer to reserves. Transfer to reserves. Need not be general reserve. It could be any reserve. Transfer to reserves. Let's suppose I'm transferring 20,000 rupees. Then less interim dividend of which year? Current year. Very good. Let's say that is 30,000 rupees. Then less preference dividend. Which year? It's a current year, sir. Current year, no? Previous year. 50,000. Less equity dividend. Which year? Previous year. Another 50,000. Please tell me what is the balance? 1,50,000 is the balance, and this is called as surplus of current year, or a profit of current year, or retained earning of current year. These are the different nicknames. All these nickname where did we study? Schedule 3. Wonderful. Now, I'm going directly notes to accounts. In notes, we have something called as reserves and surplus. Under that, we are focusing on surplus. How does it begin with? Opening balance. Opening balance of last year, can we take 11 lakhs? Okay. Add current year surplus. How much? 1,50,000. So what is my closing balance, people? 12. Who said 1150? 12,50,000. Okay. This is one way of doing it. Second way of doing it, this entire appropriation is there, no? This entire appropriation, do it where? In the notes to accounts. Okay, in that case, how will my surplus will look like? Let's have a look at it. Reserves and surplus, under that, surplus. Am I teaching anything new? Recap of last class. All of you are able to understand? Okay. Now, opening balance, how much? It's the same 11 lakh. Because the same question we are doing in a different manner. Now add current year profit. I can't say surplus here. Surplus is after appropriation. So current year profit is how much? Now you will transfer this 3 lakh because you're doing this appropriation where? In the notes. You will transfer this directly to surplus. So add current year profit how much? 3 lakh rupees. Very good. Now from that, less transfer to reserve. How much? 20, 30, 50, 50. You'll remember? Or you will say we're Gajni people. Gajni, eh? Next, less interim dividend minus 30,000. Less preference dividend. How much? 50,000. Less equity dividend 50,000. So closing balance is how much, people? So same closing balance 12 lakh 50,000 only is going to come, sir. Any problem? Current profit added, no bus? Huh? Oh my God. Always finding fault in sir. No, Siddharth? அப்ப நீ தப்பு கண்டுபிடிக்கல. அப்ப சார் தப்பு பண்ணா உனக்கு ஓகே. Okay. Nice fellows. Now, same 1250. Any change? No change? No change? Okay. Imagine if this information is given, they are asking you to calculate the cash flow from operating activity. In that, how many segments are there? How many segments? How many segments? 5 segments. First segment is what? Calculation of net profit before tax and extraordinary item. So now, here it is. Now this we have to calculate. Can we calculate? Okay. How do we calculate? Calculation of net profit before tax and extraordinary item. What is my starting point for this? Surplus is the starting point. Very good. Surplus is also called as retained earning, also called as P&L balance. Okay. Surplus, how do you calculate? Opening minus closing or closing minus opening? Hey, opening minus closing. Because in your schedule 3, change in inventory, you do opening minus closing. So you by hearted, sir. Always O first, then C first. Tell me, like that you by hearted, no? Closing minus opening. Always here closing minus opening. Closing balance is naturally more than your opening balance. If it is profit. If it is loss, it will be negative, not ulta. Donkey fellow, it will be same closing minus opening only. I knew it. So closing minus opening always. So now tell me, people, whether the presentation is given in this manner in the question or whether the presentation is given in this manner in the question. In either case, what is my closing balance? So same 1250, same 1250. Any problem in this? Whether the appropriation is done in the notes to accounts or whether the appropriation is done in the P&L. In either cases, my closing balance is same 1250, 1250. Okay. Okay, tell. I should only ask, I should only answer. No. Now, opening balance in both the cases are same or different? Both the cases same, sir. 11 lakh, 11 lakh. Okay. What is the difference? 1,50,000 is the net surplus after appropriation. This is 150 after appropriation. This 150 exactly you're getting this after appropriation. Now what am I supposed to do? Sir, this 150 is coming after appropriation, which means whatever appropriation you've done, you have to reverse it. Cancel it. How do I do the appropriation? By subtracting all the item. To cancel the subtraction, what am I supposed to do? Add back. To reverse all this, I have to add back. Subtract item, if I have to cancel, I have to give an addition to it. If an add item, I have to cancel. What I should do? Give a subtraction. So now, go back in the same order. Which order? The same order. First equity, preference, then interim dividend, transfer reserve. Same order, you will travel back. So add equity dividend. How much? 50,000. Then preference dividend. How much? 50,000. Then interim dividend 30,000. Plus minus correct? Transfer to reserves. How much? Okay. What do I get? 3 lakh. Profit before tax or after tax? After tax. Then provision for tax. Earlier you have subtracted. Now to reverse, you have to add back. So add provision for tax. Which year? Current year. Why current year? Logic is clear? Yes. Okay. How much it is? 1 lakh. Then refund of taxes earlier added. To cancel it, we have to subtract. So less refund of tax 0. Now what do I get? 4 lakh is what? Profit before tax. Now extraordinary item, income in nature added earlier. The reverse we have to subtract. So less extraordinary item, which is gain or income in nature. Okay. Extraordinary item, loss in nature, expense in nature, earlier subtracted. To reverse, now we have to add back. Extraordinary item, loss and expense in nature, we have to add back. So what do I get now? That I know. What is this called as? Net profit before tax and extraordinary item. This is what I want, not 4 lakh. Now, sir, this 4 lakh was there here, no, sir. Why did you calculate? Donkey fellow, am I sitting and calculating 4 lakh value? I am teaching you how to calculate that 4 lakh value. I am focusing on the process. I am focusing on the steps. Correct, no, Albin? Any problem in this? This is called as segment 1 of your operating activity. How much? 4 lakh. Now, please tell me. Let me take that example which I discussed the other day. Guys, I'm taking this example to make you understand one concept. Please tell me something. Cash sale 250. Cash sale means what? 2,50,000 worth of goods sold against that money collected. So how much money am I having in my pocket? 250. Wonderful. In that, how much money I've spent? 2 lakh rupees money spent. How much is cash expenses? 150. Correct? Imagine this is not 250 and this is 650. Cash sale is 650. So how much money is there in hand? 650. 650. In that, how much I've spent put together? 350 spent. 6,50,000 minus 3,50,000. 3 lakh rupees should be cash in hand. Imagine segment 2, segment 3, segment 4, segment 5, nothing is there. So this automatically becomes my cash flow from operating activity. It becomes cash flow from operating activity. This is now segment 1, correct? No? In segment 1, I calculated net profit before tax and extraordinary item and I got 3 lakh rupees. And I don't have anything in segment 2, 3, 4, 5. So now this 3 lakh rupees, what I got is called as cash flow from operating activity. What does this 3 lakh mean? Imagine there is no opening balance. There is no, there's no opening balance. So this eventually become my closing balance. Correct? No. Imagine this is cash flow from operating activity. Investing is 0. Financing is 0. What is my net flow? 3 lakh rupees. Imagine your opening balance is 0. Then this 3 lakh is automatically your closing balance. You got it? So now what I'm trying to explain is that always this cash flow from operating activity is there. No. This is your operating cash profit. You understand what is meaning of cash profit? From cash income, if I minus cash expenses, it is called as cash profit. Means if I get 100 rupees, from that if I spend 80 rupees, remaining 20 rupees is there in my pocket. Guys, we're doing cash flow statement. So in the cash flow statement, the profit what I'm interested into is the cash profit. You understand what is meaning of cash profit? Cash profit means what? 100 rupees collected, 80 rupees spent, balance 20 rupees is cash in hand. That is my cash profit. That is what I'm interested here. Cash flow from operating activity means I'm interested into my operating cash profit, which means at the operational level, how much cash is generated in my hand. My question goes to all of you. This net profit before tax and extraordinary item 4 lakh, what is visible to you on the screen? Is it my cash profit or not? Is it my cash profit or not? Nishi says no. No. This is not cash profit. No. 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 Yes. Yes. No. 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 These people, understandable. You guys are saying no. I was having a lot of expectation from all of you. So that you will say yes. Anyways, online people, how many of you say this 4 lakh rupees is cash profit? Offline people, everyone is saying except one. This is no. This is not cash profit, sir.
Yes, sir.
Tell me. This 4 lakh is cash profit or not?
Yes, sir.
Okay. Yes. Online. Who said yes? Gaurav said yes.
Kaushik.
Kaushik said yes. Okay. Others. Hari Charan, Harini SN, Jayesh, Gaurav. That 4 lakh rupees is cash profit or not? Gaurav, where are you?
No, sir.
No. Hari Charan. Hari Charan, where are you?
Sir, no only sir.
See, நார்மலா கேட்டா எவனும் பதில் சொல்றது இல்ல. ரைமிங்கா கேட்டா தான் பதில் வருது எனக்கு. ஹரிணி எஸ்என், where are you?
No, sir.
No,
No, sir.
Jayesh,
Sir?
yes or no?
Yes, sir.
Cash profit, அப்ப ஜெயேஷ் கவனிக்கலன்னு அர்த்தம். Why Jayesh, you didn't listen?
Sir, I listen only, sir.
அப்ப yes or no? That 4 lakh is cash profit or non-cash profit? No response, Jayesh. Nishant. Nishant, where are you? Nishant, where are you? Reshma, cash or non-cash करना? Revati, Shushmita, Tarini.
Non-cash, sir.
Non-cash. Others?
Non-cash.
Okay. All those people who said this is not cash profit, can you give me your own reasoning why this is not cash? Now, rightly said. This net profit before tax and extraordinary item, from where did you take this information? From your P&L. From statement of P&L. Statement of P&L is prepared as per accrual basis of accounting. Accrual basis says what? Record income when it is earned. Whether money received or not received, you record the income. Record expenses when it is incurred. Whether money paid or not paid, don't be bothered. So when I record sale, I have two components. One is cash sale, second is credit sale. Credit sale means what? Income earned, money not received. Some money received later, but some cases money not received. Likewise, in expenses also we have cash expenses and credit expenses. Cash purchase and credit purchase. So this net profit is not my pure form of cash. This profit has got some adulterated items in it. So now we have to remove those adulterated items. What is adulterated items? Something which is mixed up. Something which is not qualitative oriented is mixed in this. Now that we have to remove. Segment 2 and segment 3 does the job of removing the impurities. Segment 2 and segment 3 now does the job of removing the impurities. Means in this 4 lakh rupees, whatever adulteration is done, that we are removing through segment 2 and segment 3. Sir, what adulteration is done in this? My simple question. How do you calculate net profit before tax and extraordinary item? It's very simple. Revenue from operation is given. Let's say 15 lakh. Other income 2 lakh. How much it is? 17 lakh. Then this is called as total income. Okay. Then cost of material consumed 2 lakh. Then purchase of stock in trade. Purchase of stock in trade 1 lakh. Then changes in inventory. Let's say 1,50,000. Then employee benefit expenses. ஆசைப்பட்டா இதுக்கு போட்டுடலாம் 3 lakhs. Finance cost. மனசாட்சி இருக்கடா. Already 17 lakh is my total income. Ala 10 lakh finance cost na. That too finance cost 10 lakh is still. My business expenditure itself is less than 10 lakh. Finance cost 10 lakh means which investor will come and invest in my company? Dangi fellow. 50,000 looks decent. Then 10 lakhs amount. Depreciation, amortization 1 lakh. Now, how much is all this put together? Tell me. 9. 17 minus 9 is how much? 8 lakhs. So other expenses 4 lakh. How much is my net profit before tax and extraordinary item? Net profit before tax and extraordinary item. Donkey fellow, when 4 lakh I have taken here, then I have to derive the value in such a way that I get 4 lakh there, no? Little bit common sense you have to apply, no? 4 lakh you got. I'm trying to explain how I got this 4 lakh. How I got this 4 lakh? This. Now, I'm telling you, this 4 lakh is not purest form of the cash profit. In this, adulteration is done. Now, please tell me, if I don't give you any information apart from this, apparently, which item very clearly is visible to your eyes that this is non-cash item? Depreciation and amortization, sir. 1 lakh rupees you have subtracted as if an expenditure has happened. But for that, did you pay any money? Did any outflow of the money happen? So, can I consider this item for the cash flow purpose? No. I should not consider this for cash flow purpose, but this has already been considered. How it is being considered? When I took net profit before tax and extraordinary item as a base, in that depreciation is already subtracted. Guys, what is my starting point of cash flow from operating activity? This is my starting point. If the starting point is without adulteration, means pure cash profit, then I need not be worried about the depreciation. But I've taken this 4 lakh rupees. Is this pure 4 lakh rupees the purest form of the cash? No. In this cash, there is all adulteration done. What adulteration is done? Sir, in this depreciation is subtracted. Should you minus it in the cash flow statement? No. But it is already subtracted. Now I have to cancel the impact. So minus item, if I have to cancel, what am I supposed to do? Add back. So now, add non-cash or non-operating items. Add non-cash and non-operating items. Non-cash and non-operating. One example I gave is depreciation. I am telling this 4 lakh. If I remove this 4 lakh people, what is my actual profit? If I remove this so not 4 lakh. If I remove this depreciation amortization, my original profit is 5 lakh. Assume. This is cash sale. This is cash other income. This is cash cost of material consumed. This is cash purchase of stock in trade. This is cash inventory, EB, FC, everything is in cash. So cash inflow, outflow, everything is in cash. So can I say now this 4 lakh rupees, if everything is in cash, this 4 lakh also will be purest form of cash? Yes. Correct. In other words, imagine revenue from operation, 1 lakh rupees. What is this? Cash sale minus purchase of stock in trade. 80,000 cash purchase. In that I'm minusing, okay, if I don't minus depreciation, what is 20,000 rupees? Sir, cash profit. So this is also called as net profit before tax and extraordinary item. So if I take this 20,000 rupees as net profit before tax and extraordinary item, and this if I make it as a starting point, do you have any problem? No. In this, do I need to make any adjustment to remove any non-cash item? No, sir, you did not minus any non-cash item. You minus only cash item. Cash paid, that's what you've subtracted. And cash sale done, received, that is what you've added. So in this, there is no adulteration. This 20,000 is the purest form of the cash. So if I make this as my starting point, there is no need to adjust for segment 2 and segment 3. Automatically, this will become your cash flow from operating activity. Do you agree with me? Now what I'm telling is that I did one adjustment of depreciation. So now the minus depreciation I've subtracted 10,000 rupees or let's say 5,000 rupees. What is the balance now? 15,000 rupees is nothing but called as net profit before tax and extraordinary item. Now this becomes my starting point of operating activity. Do you agree with me? So if I make this as starting point, net profit before tax and extraordinary item, if I make this as starting point, and imagine in segment 2, segment 3, I don't do any adjustment. Segment 4 and segment 5, I don't do any adjustment. Automatically, this becomes my cash flow from operating activity. If I call this as my cash profit, will you agree with me? Why? Because in this, depreciation is subtracted. So if I do not adjust this net profit before tax and extraordinary item, if I don't adjust my segment 1 with segment 2 and segment 3, my cash flow from operating activity is not the proper cash profit. It will still be adulterated profit. So as a CA, should I not do segment 2 and segment 3 adjustments to remove all the impurities? Yes, that is what we are going to do now. So now, how did you get this 15,000? After subtracting depreciation. This impact is wrong. I should not minus it because there is no cash outflow for this depreciation. So now, since this is not a cash outflow item, I need to cancel this by reversing it. How do I reverse a minus item? By giving an add. So now what I'm doing in segment 2, which is non-cash and non-operating item, I'm adding back how much? 5,000 rupees. So add non-cash and non-operating item, which is 5,000 rupees in form of depreciation. Now how much it is? 20,000. Imagine there is no segment 3, segment 4, segment 5 adjustment. Nothing is there. So this becomes my cash flow from operating activity. Now if I call this as cash profit from the operating activity, do you have any problem? It's pure cash profit. No? Any problem in this? Now do you understand what is the purpose of segment 2? Now do you understand what is the purpose of segment 2? Everybody. Now, like that, we have to go through each and every item one by one. So how many non-cash and non-operating items are there? You know, this many. Only one I've explained, which is depreciation. So much are there to be learned. Imagine people. If you take the first question of your ICA module, second question, third question, till end, all big question. There is no small question. There is no individual question on how to calculate the segment 1. There is no individual question on how to calculate segment 2. There is no individual question to calculate segment 3, segment 4, segment 5. There is no individual question for cash flow from investing activity. There is no individual question for cash flow from investing activity. It's a big full-fledged question for 10 marks, 15 marks, which is a full-fledged question. If I don't teach you small aspect, if I don't give you the basic explanation, will you be able to digest this cash flow statement? Impossible. Such a beautiful topic, easy to score topic. The main problem what happens is directly people take into the big questions, people don't understand the basics. So we are spending more time to understand the basics. Once the basics are made strong, I'm telling you those 14 questions that we are going to work out now, just like that you'll be able to finish. And that too with very smoothness, every single point you'll be able to digest with. Am I loud and clear? So if you want to make those 14 questions doable, then understanding each of these points is very important, because if these are not clear, those big questions you cannot understand. Are you able to follow? So now we are doing segment 2. In segment 2, there are two types of items. One is non-cash item. Second is non-operating item. First, let's discuss about non-cash item. Non-cash item means what? Depreciation, where the depreciation is subtracted from my revenue, but I did not do any outflow of that. There is no outflow of that, but it is subtracted. So that subtraction is right or wrong? From the revenue from operation or from total income, if I minus depreciation and present to take, this is my cash profit. Do you agree this is cash profit? No, this has come after minusing a non-cash item. So cancel that non-cash item. So subtraction item, how to reverse it? By addition. Similarly, next item is amortization. Depreciation is for tangible assets. Amortization for intangible assets. Same treatment. Same treatment. Wonderful. Next. Loss on sale of fixed asset. Loss on sale of fixed asset. Now, let's come back to this. I said you, my revenue from operation is 1 lakh. Purchase of stock in trade is 80,000. Okay. Now, there is one particular asset which is worth 40,000. That is the book value of the asset is 40,000. I sold it for 35,000. How much is my net difference? Profit or loss? So 5,000 is the difference, which is my loss. Do you agree with me? So now the loss, you have the habit of transferring where? P&L. Where in P&L? Other expenses. Correct? So now, can I say here, loss is subtracted to the extent of 5,000 rupees. So how much is my net profit before tax and extraordinary item? It is 15,000 rupees. Now, I am going to take this as a base to calculate my cash flow from operating activity. Now, imagine this I have put as cash flow from operating activity in segment 1. Segment 2, segment 3, segment 4, segment 5 adjustment I am not doing. Directly, I am telling this 15,000 rupees as my cash flow from operating activity. And I am saying this is my cash profit. Will you believe me? You will not believe this is my cash profit. Why? Because in that, I have subtracted 5,000 for which I did not pay any money from my pocket. From my pocket, 5,000 I never spent. I sold 40,000 worth of asset for 35. So I got 35. Remaining 5 I did not get. Account says what? Record all your losses. So by that virtue, we recorded losses. Nowhere account says that record only your cash loss. Even there is a loss where the money does not come in. That is also a loss which you have to record. So as per accounting regulations, 5,000 recording in other expenses is right. But cash flow statement is considering only cash items. But in this, do you have Cash item, no. You have one non-cash item. Means you have subtracted one 5,000 for which money is not paid. Is this right? No. So to cancel a minus item, what am I supposed to do? Add back. So where will I add back? In your P&L. Can you touch your P&L? Arey Baba, P&L what they have prepared is absolutely right in accordance with the accounting rules and regulations. In cash flow statement, this is wrong. So where you should do the adjustment? In cash flow statement. Where in cash flow statement? Segment 2. So in segment 2, what I should do? Add loss on sale of asset. So under non-cash and non-operating item, add back 5,000 rupees as loss. That's what I've done here. Add loss on sale of fixed asset. Add loss on sale of investment. Any problem? Like how fixed asset could be sold at loss, even investments could be sold at loss. Any problem? Please tell me if you have any problem in this. Please tell me if you have any problem in this. Like how I can have loss on sale of fixed asset, I can also have loss on sale of investment. 40,000 worth of investment sold for 35,000 rupees. Loss on sale of investment. Now, next is DRE AS written off. What is it? What is it? Deferred revenue expenditure or advertisement suspense or miscellaneous expenses written off or preliminary expenses written off. What does it mean? What is deferred revenue expenditure? What is deferred revenue expenditure?
Yes, long term.
Long term, something which is long term. Okay.
It's long term effect in the business.
Correct. Kritin got it right. Online you said long term only, but main point. Correct. So I gave you example of, yeah, correct. It is in between revenue and capital. Capital expenditure, what happens? Capital expenditure is the big expenditure I'm doing where I'm having some asset which is in my name. For example, if I buy building, so it's a cash outflow. At the end of that, I'm getting an asset which I can own it in my name. And I can use that for more than one financial year. That is capital expenditure. Revenue expenditure means what? I spent this 10 rupee on pen. The benefit is consumed in the same year. I spent 10 rupee on this pen. I'm consuming the benefit in the same year. It is your revenue expenditure. Where the expenditure ka benefit is consumed more than 1 year, it is your capital expenditure. So what is revenue expenditure? So I spent some money and the benefit out of this I'm getting for 1 year only, which is current year. In that case, the entire expenditure is my revenue expenditure to be recorded in your P&L. What is capital expenditure? So I'm spending money, but the benefit is coming for more than 1 financial year. Not just current year, more than 1 financial year. Plus, I'm creating an asset in my name. Now, what is deferred revenue expenditure? Deferred revenue expenditure is also money spent, expenditure incurred, and the benefit coming for more than 1 year. But still, I cannot call this as capital expenditure. Why? Because in capital expenditure, you own something in your name. But deferred revenue expenditure, you cannot own anything. Hence, we have to differentiate between capital and deferred. Capital means what? Getting benefit for more than 1 financial year. Deferred also, getting benefit for more than 1 financial year. But what is the difference between the both? In capital expenditure, something you register in your name. Land, building, plant, machinery, something concrete is there. Whereas in your deferred revenue expenditure, I cannot get anything concretely written in my name. And the name is what? Deferred revenue expenditure. Means what? This expenditure I cannot record in 1 year. I have to record it over a period of time. I have to defer my expenditure over a period of 4-5 years because the expenditure is comparatively huge. So I gave you an example of Virat Kohli. Do you agree with me? I said Virat Kohli is the brand ambassador of Kalpavriksha Academy. So for doing all the promotional, trust me, I'm telling you, 5 crore rupees I paid him. 5 crore rupees I paid him in year 1. What is a journal entry? Sir, one thing we know very clearly, to bank 5 crore will come, sir. Because from your bank account, 5 crores went. 5 crore is not there in my bank account. I'm just telling you. To bank, 5 crore. Debit is what? Advertisement expenditure. Wonderful. That's all. 5 crores or how much amount? Then you should ask a question, sir. The benefit out of this is coming for how many years? We need to ask this question only. This is coming out of 5 years, which means I have to apportion over a period of 5 years. Which means in 1 year, I should record only 1 crore as expenses. So in the advertisement expenditure, in your ad expenditure, only 1 crore will go. Remaining 4 crore will go where? Deferred revenue expenditure account debit. So in your P&L, to advertisement expenditure, 1 crore you will record. And remaining 4 crores will go where? In your balance sheet as deferred revenue expenditure 4 crore. Do you agree with me? Second year, what happens? What is my second year entry? What is my second year entry? Whatever is there in deferred revenue expenditure, I'm transferring 1 crore from that to P&L. So what is my transfer entry? All this is discussed, donkey fellow. 11th ones, 12th ones, CA foundation ones. 3 times I've discussed this. 4th time I'm discussing. P&L or advertisement expenditure, whatever you say. Account debit to deferred revenue expenditure, 1 crore, 1 crore. So the moment I credit the deferred revenue expenditure in the second year balance sheet, the deferred revenue expenditure becomes now 3 crore. 4 minus 1 is how much? 3 crore. And in the P&L of that year, you'll record 1 crore as expenditure. Correct? No? So now do you understand what is the meaning of deferred revenue expenditure written off? Now here, this 1 crore rupees, what you've written off in the P&L of the second year, no. This is called as deferred revenue expenditure written off. You understand this meaning? Third year, if I prepare the third year balance sheet, what happened? Deferred revenue expenditure will become now 2 crore. Where did the 1 crore go? It went to the P&L of that year itself. 1 crore rupees as expenditure. So this 1 crore which I'm recording in the third year P&L, this is called as deferred revenue expenditure written off. My question is, when I recorded this 1 crore in the year 2, year 3, year 4, year 5, did I pay 1 crore to Virat Kohli in the year 3, 2, 4, 5? When did I pay the money? Cash outflow happened. Cash outflow happened in the first year itself. In second year, third year, fourth year, fifth year, in the balance 4 years, as per your matching principle, we bifurcated those expenditure only. We did not pay any money out of it. We did not pay any money out of it. But now what did you do? You have subtracted deferred revenue expenditure. So now come back to our example. Revenue from operation, 1 lakh. Purchase of stock in trade, 80,000. And I have subtracted minus deferred revenue expenditure. How much? 5,000 rupees. Did I pay any money in this year? No. This is already paid in the earlier years. Now you have paid this money out. Did any cash outflow happen? No. To cancel this minus item, what I'm supposed to do? Add back. So are you clear with the logic why the deferred revenue expenditure is added? Yes, sir. Same thing is advertisement suspense, preliminary expenses, and any other expenses written off. Next, bad debt written off. One second. Next is bad debt written off. What is bad debt written off? What is bad debt written off? Bad debt written off. When did you write off? Earlier or now? Current year. Current year. So basically, you made a credit sale either in the earlier years or in the current year. In the current year, when you went to the debtor, telling that debtor, give me the money. What did he say? On your face, get lost. I'm not paying you the money. Means what? This money I'm never ever going to recover from that fellow. I will never recover that money from that fellow. Isn't it a loss for me or not? Yes. Prudence concept says record your losses. Forget prudence concept. Account says that if there is any loss, record it. So now, 1 lakh is my revenue from operation. 80,000 rupees is my purchase of stock in trade. This one particular debtor from whom I'm supposed to receive 5,000. I did not receive that. He said that I'm never going to pay you back again. Isn't it a bad debt for me? Yes. What is the journal entry for bad debt? Bad debt to debtor. And this bad debt is transferred to P&L. Where does it go in P&L? A debit, okay. Where? Which classification? Schedule 3, mano. Other expenses category. So in the other expenses category, this bad debt has been subtracted 5,000 rupees. Yes or no? Yes. After that subtraction of 5,000 rupees only, you got is 15,000. Do you agree with me? For this, did you pay any money from your pocket? So is this a cash item? So what item it is? Non-cash item. So what am I supposed to do? So I have to cancel the impact of the subtraction. How? By adding it. So therefore, added bad debt written off. Any problem in this? Easy. Now, next is loss on issue of debenture. What is the meaning of loss on issue of debenture? We have studied this twice. Tell me where. 1 in 12 CBSE, second in CA Foundation. Now tell me people, all the data entry people, please tell me. Had I not given you the basic classes? Had I not given the basic classes? Debenture not known, issue of share capital not known, bonus issue not known, redemption not known. What will happen to you? Loudly, loudly. Govinda, oh Govinda. Now that you said, sir, we know the basics. Siddharth, my question goes to you. When does loss on issue of debenture happens? What is loss of issue of debenture? Loss on issue of debenture. While issuing debenture, loss will happen. How many type of loss? Two type of loss. One, 100 rupee worth of debenture. You are issuing at 90 rupees. Means you are giving him 100 worth of debenture. But how much are you collecting in return money? Only 90. The balance 10 what you have not collected is called as discount on issue of debenture. Correct? No? This is one loss. Second loss. This 100 rupee worth of debenture, when you're going to repay in future, let's say after 5 years, 10 years, 15 years, you promised when today, while issuing the debenture, today you promised that I will pay you 120 rupees. Means 100 rupee worth of debenture, how much are you going to pay? 120. How much extra you're going to pay? 20 rupees extra you're going to pay. This is called as premium on redemption, which is nothing but loss. This is premium on redemption. Premium on redemption, which is nothing but loss. So how much is the total loss? 30 rupees per debenture is your total loss. Okay, not okay? Any journal entry to be done for this? Okay, let's do it. Entry, pa. Tell me. Ipoda. I thought you will say yes, sir. You said no. In my mind, I prepared, I'll do the entry. Sir, I said yes. And entry, please. Bank account debit. Imagine only one debenture. Donkey fellow. Bank account debit to. Okay, direct entry you want. Combined entry. Such a lazy goose you guys are. Okay. Okay, bank discount on issue of debenture account debit. How much? 10 to 10% debenture, 100 rupees. Correct, no? So now in your balance sheet, in the bank account, how much money is come? 90 rupees. How much is the worth of the debenture? 100. And how much is the loss? 10 is the loss. Because loss ultimately reduces from your capital. So I'm minusing this from capital. So total on both the sides is how equal? I know, ma. How much equal? 90 and 90. Any problem? Now second entry. What is second entry? Prudence concept says that you know about this loss today itself. So this loss you have to record in your P&L. How you should record? Entire amount in one shot? No, you'll record over a period of its life of the debenture. The life of the debenture is for 5 years. Write for 5 years. You have to write off for 5 years. The life of the debenture is for 10 years. Write off for 10 years. In 12th CBSE, they have the habit of recording the entire loss in one shot. In CA Foundation, we made that correction. No, we can't do that. We have to write off over a period of its useful life. Do you agree with me? So, but for convenience sake, I'm recording the entire loss in 1 year. Only for explanation purpose. Can I do that? Okay. What is entry for loss? Wonderful. Loss on issue of debenture accounted. How much is loss? 20 rupees is loss. Why? Because 100 rupee worth of debenture, in future I'm going to repay at 120. So how much extra you're going to repay? 20. Now Balaji is saying 30 should come. Donkey fellow. 10 is already recorded here, no? Solliya. 30 I got. Okay. I heard 30, that's why. Anyways, loss on issue of debenture account debit how much? 20. See, one loss is 10, which is discount loss. Second loss is 20, which is loss on issue of debenture arising out of premium on redemption. Means what? 100 rupee worth of debenture, you actually gave him 100 rupee worth of debenture. But in future, how much are you going to pay him back? 120 rupees, 20 extra from your pocket you'll pay. So 20 rupees is called as loss on issue of debenture. 2. Premium on redemption of debenture 20. So this loss will be subtracted from your P&L. Where in P&L? If it goes to P&L, where? Finance cost. Where in P&L? Finance cost. Anything related to financing, it goes to finance cost in a schedule 3. Yes or no? Yes. And this 20 will go where? This 20 will go where? Sir, in balance sheet. No, donkey fellow. No. Balance sheet it goes where? Under?
Long term.
I'm taking this after 5 years. Where will it go? No.
Long
Premium
term.
on redemption of debenture.
Other long term liabilities.
Long term borrowings. Under long term borrowings, where? Current maturities will come when? If I'm repaying in next year, the premium is going to be due for next year payment. That time it is current. I knew you'll make this mistake. Now you understood why I asked the journal entry. Today I am on the first year. I am going to redeem after 5 years. So in the first 3 years, the long term borrowing, if 100 rupees there in the long term borrowing, then this 20 rupee premium redemption will be where? Other long-term liabilities, that is other non-current liabilities. Are you able to follow? Which will be minus from surplus in the first year. Hello. She's telling I have to minus it from, my goodness, after finishing schedule 3 asking this doubt. When do we minus it from surplus? Imagine this 20 rupees I am bifurcating over a period of 10 years, let's suppose. So 2 rupee written off in the first year. Remaining is how much?
8 rupees.
8 rupees. That 8 rupees which is not written off, which will appear in the balance sheet asset side, that I have to minus from surplus. The unwritten off part of the loss on issue of debenture. Now I told in the beginning that entire 20 rupees I'm writing off in the P&L. So minusing from surplus, where will it come? Minus from surplus will come when? When out of 20 rupees, 2 rupees is written off and remaining, how much? 18 rupees is yet to be written off. That remaining 18 rupees will be subtracted from your surplus because it is appearing on the asset side as loss on issue of debenture on the asset side. Since it is wrong, Schedule 3 does not allow, what will we do? We'll regroup it to the liability side by way of minusing from surplus. So that is not my discussion point here. That is my Schedule 3 discussion point.
That time 18 will be minus from surplus, 2 will be other current liability.
2 will not. Oh, no. Oh my God.
Sir, short-term maturity. Writing off that current year.
Wait, since you have this confusion, I'll finish off now itself. Listen. Oh my God. I don't believe this. Listen. Shh. 20 divided by 5 is how much? 4. Sharing. Imagine the life of the debenture is 5 years. Okay, wow. Which means this loss has to be split over a period of 5 years. Now, what is my third entry? I have to transfer the part of the loss. 20 by 5 is how much? 4 rupees I am transferring to P&L. So P&L account debit to loss. Now, how much? 4 and 4. When I do that, how much is the balance in the loss account? 16. And the loss will have what balance? Debit balance. So now this loss will appear where? 16 rupees will appear on the asset side. Now this loss which is yet to be written off. When will I write off? In the future. Second year, third year, fourth year, fifth year. 4 rupees. 4 fours are 16. I'll write off in the future. No. This showing on the asset side, Schedule 3 does not allow. So we take it on the liability side and minus from surplus. So are you clear with the loss on issue of debenture part? Loss part is clear. Okay. Now, whereas this premium on redemption of debenture will be classified where? Sir, this 10% debenture is there. No. This will be classified long-term borrowing. And since this is also long-term in nature, it will go to your other non-current liabilities. So year 1, year 2, year 3, both of them will be in the non-current liability. In year 4, 1 year before the repayment, this 100 rupees will be classified from long-term to short-term borrowing. Where in short-term borrowing? Current maturities of long-term debt. And this 20 rupees from non-current liability will be classified to current liabilities. Where in the current liabilities? Other current liabilities. Now clear? This I am discussing for the third time. In this, do you have any doubts? No doubts. My question is, how much loss is transferred to P&L? 4 rupees is transferred to P&L. This is the amount written off. This amount is subtracted from your revenue from operation. So how much did you subtract? 4,000 rupees. So please tell me, what is my net profit before tax and extraordinary? Minus 4,000. This is your discount or loss or issue of debenture 4,000. How much? And this also we have to bifurcate, no? Can I do this and this together? 10 plus 20 is how much? 30. 30 divided by 5 is how much? 6 rupees. 6. So 6 I am transferring to P&L. Do you agree with me? So how much is the balance here? How much will be the balance? Loss and discount put together. 30 minus 6. 24 is the balance. This 24 will minus it from surplus. So 6 is taken to your P&L. So can I put 6,000 here? So this 6,000 where would have you recorded in P&L? Where in P&L did you record? In finance cost. For this, did you pay any money? Any cash outflow happened? No. In both of these cases, discount and loss on issue of debenture, which is on account of premium on redemption, did you incur any outflow from your pocket? No. Hence, this is a non-cash item. Hence, the non-cash item which is subtracted earlier, to cancel, what are we supposed to do? Add back. So in segment 2, add back 6,000 rupees. So how much is net profit before tax and extraordinary item? 14,000. So in this 14,000, I'm adding back 6,000. So what is your cash flow from operating activity? 20,000 rupees. 20,000 rupees. Any problem? Are you all comfortable? Everybody, please open your mouth and respond. Can I go to the next point? Can I go to the next point for discussion? Open your mouth and respond. Can I go to the next point? Yes. Okay. So guys, all this item that I discussed so far is non-cash item. In this, do you have any problem? All the non-cash item which is of expense and loss in nature, we have to add back. Yes, Sumanyu. Can I take the journal entry for? Deferred revenue expenditure journal entry. I have to search where it is. Here it is. Well, why should you categorize? This is 5 crore already gone from your bank, no? See, in direct method only, guys, please understand what question Suman is asking is, sir, in this deferred revenue expenditure, we understood with 1 crore, 4 crore, what am I supposed to do? Bank 5 crore, where should I put in cash flow statement? Please understand, in direct method, the cash and bank ledger is the base to prepare the cash flow statement. Here, apart from cash and bank ledger, we're using all the other ledgers to prepare the cash flow statement. Please understand, the ledger is of two types. One is cash bank and cash equivalent ledger. One is all the other ledger. Do you agree with me? In this, do you have any doubts? If I take the cash bank and cash equivalent ledger and prepare the cash flow statement, this is called as direct method. If I don't use this and if I use all the other ledger, then this is called as indirect method, which means I'm calculating the cash flow statement indirectly using this ledger. I'm calculating cash flow statement directly using the cash and bank ledger. So this is direct method. Do you agree with me? So if I take the information from the cash ledger, cash bank ledger, cash and cash equivalent ledger, this is preparing the direct method. Preparing food, eating food like this. And when I use all the other ledger apart from cash and bank ledger, you're preparing the food, eating food like this. So always one impact will be given here, another impact will be given here. So in a transaction, one impact is coming here, another impact is coming here. So this impact will be taken in direct method. This impact will be taken in indirect method. So your question, my dear friend, so the impact which is given in cash and bank ledger, that 5 crore, what should I do? If I am preparing the cash flow from direct method, I'll consider that, or else I will not consider that, because I'm taking the other part of it. I'm considering the other part of it. So any one part I have to consider. No? Both the parts I cannot consider for cash flow statement. For example, cash sales, cash account debit to sale, 100 rupees, 100 rupees. Can I say 100 rupees plus this 100 rupees, both put together 200 rupees is my profit? Can I say? The question is like that. If I take this information, I can put this information under direct method. If I take this information, I'll put this under indirect method. So any one part of the transaction can be only considered for cash flow statement. If I take the cash part of the transaction, it is for direct method. If I take anything other than cash, this will become your indirect method. Yes. So in all the transaction, if I ignore the cash transaction of that and take the other item, then it means you are preparing the cash flow statement under indirect method. And in that journal entry, if you ignore that item and prepare the cash flow statement based on the cash and bank and cash equivalent ledger, then I'm preparing the cash flow statement under direct method. Any problem? Yes.
Sir, for the deferred revenue expenditure, you did note it up. So on the first year, when actually that expenditure happened, that time is not added back.
Okay. Now the question what she's asking is, sir, imagine the deferred revenue expenditure. Year one is there, no. In the year one, out of this, what should I add back? Please think, no. Out of this entire transaction, what is traveled to your P&L? This 1 crore rupees is traveled to your P&L. So this 1 crore rupees you'll add back as non-cash item. Do you agree with me? 1 crore is traveling to your P&L, which means From the revenue from operation. Revenue from operations, let's suppose 10 crore. Minus purchase of stock in trade, 7 crore. How much is my cash profit? Hey, 10 minus 7 is how much? 3 crore. Now, 1 crore rupees is what? Advertisement expense. So minus advertisement expense, how much? 1 crore. What is the balance? 2 crore. So this 2 crore is called as net profit before tax and extraordinary item. In this, what is adulterated? This 1 crore is adulterated. We have to add back. Sir, what happened to remaining 4 crores? Sir? Deferred revenue expenditure, we have subtracted reserves and surplus. That time we will take care of it. Or else, then what? Deferred revenue expenditure is subtracted from surplus. Otherwise, you can adjust in segment 3. Either in segment 1, this gets adjusted, or segment 3. If it is subtracted from your surplus, then you, while calculating the net profit before tax and extraordinary item, those 4 appropriation there, no, in that you will add it back. And minus it where? Minus it where? This is extraordinary item. So again in segment 5, you will minus the entire 5 crore rupees. That's the reason I'm not going everything together. Allow me to go one by one. As and when the segment is coming, if you allow me to explain, that time there will be no problem. Now what happened? I'm sitting in segment 2. You're asking me direct question of segment 5. So my only point of discussion now is non-cash item segment 2. If this is clear, I would like to go to non-operating item. Tell me if you're clear with this, can I go forward? No, direct method. No, I'm not answering any of that. Please, it'll be confusing. Now, see, okay, remote is not here.
Sir,
This projector. Now, next non-operating item. Now, I'm focusing on the Okay, before that, there's one more non-cash item. Tell me what? Increase of provision for doubtful debt, provision for discount. The provision which is created in current day. What is the journal entry for provision for doubtful debt? When the provision is created for the very first time, what is the entry? P&L to PDD. In the P&L, where do you classify provision? Other expenses. Other expenses. Did you pay any money for creating the provision? No. It's a non-cash item. So to cancel the impact of the minus that we have done, we have to add back. So I'm add backing the provision for doubtful debt or provision for discount. Any kind of provision for that matter, which is created on the asset, that needs to be added back. All these are CA foundation item. All these are CA foundation item. You guys are blinking now, even after clearing foundation. Donkey fellows.
sir,
Depreciation, where did we study? Foundation. Amortization, where did we study? Foundation. Loss on sale of fixed asset, loss on sale of investment, deferred revenue expenditure, loss on issue of debenture, bad debts, creation of provision. Is which topic? CA foundation topic. Why are you giving me gloomy faces now? Can I teach foundation here in the intermediate level? I can teach. Extra time if I take, will I be able to complete the portions on time? No. So what are you supposed to do? You're supposed to revise all this and come. Or you thought foundation over? Everything. Let's forget. Control or delete. Permanently remove from the mind. Donkey fellow, don't do that. You'll be having a big trouble later. Now, 2 more items. Underwriting commission. Again, foundation topic. Interest paid on debenture. Again, foundation topic. Nothing is inter topic. I'm discussing foundation topic only. What is underwriting commission? The commission paid to underwriter to fulfill the gap of minimum subscription not being met. So this underwriting commission paid, let's say this underwriting commission is paid. What is the journal entry for this? Underwriting commission to cash and bank. And this underwriting commission to transfer to P&L. Where you transfer in P&L? Finance cost. Where in P&L? Finance cost. Any expenses in relation to financing of the business is my finance cost expenditure. So now coming back to my example. Revenue from operation 1 lakh. Purchase of stock in trade 80,000 minus underwriting commission paid in the finance cost 5,000 rupees. Who says stop? ₹5,000 is the underwriting commission paid. Now, what is the balance money in hand? 15,000. Is this cash profit or not? Is this cash profit or not? Is this 15,000 cash profit or not? How many of you say no? My question is revenue from operation, cash sale 1 lakh, cash purchase 80,000, cash paid to underwriting commission or an underwriter is 5,000, 15,000 rupees cash profit or not? So I am taking this as net profit before tax and extraordinary item. Starting point. Segment 2, segment 3, segment 4, segment 5, nothing adjusted. I am telling this 15,000 rupees is my operating profit, which is cash profit. Will you agree with me? Cash paid, no boss. In the previous cases, cash paid was not there. So you reversed it. Here, what is the problem? Sir, cash paid is right. But is it operating activity? No. This is related to financing activity. What you minus is right. Minusing is right. Place is wrong. Minusing is right because cash outflow. But the place where you've recorded, where you've subtracted is where? Operating activity. Because net profit before tax and extraordinary item is the starting point of operating activity. So in this 15,000, that 5,000 is subtracted and then coming. So I have to add back this 5,000, and since it is paid, it's a cash outflow. I have to minus where? In the financing activity. So now in segment 2, add back your non-operating item, which is what? Underwriting commission paid 5,000. So actually, what is your cash profit? From business operation, what profit you made? 20,000 rupees is your operating profit in cash. And in the financing activity, since the underwriting commission is paid, minus underwriting commission paid, how much? 5,000. So what is your net inflow? 15,000 is net inflow. But actual inflow from operating activities, how much? 20,000 rupees. Are you able to follow? Yes, sir. Now listen to me very carefully. Underwriting commission, interest paid on debenture, any kind of loan. If these are paid, I've put a note here. Non-operating expenses such as underwriting commission, interest, etc. paid is added in segment 2. Reverse means what? Added in segment 2 as non-cash and non-operating item. Since this is already paid, since it is paid, if it is paid, again it will be subtracted from the financing activity. If it is not paid, then it will not be subtracted in the finance activity. Non-cash, non-operating only, but money not paid. Non-cash you can say, but if I say non-cash, people get confused with the non-operating item. One more time. Non-operating expenses such as what? Underwriting commission paid, interest paid. I'll just change the word. Underwriting commission or interest paid. This will be reversed in segment 2. Minus item, how do I reverse it? By adding. And if this is already paid, if this is underwriting commission paid, interest paid, since this is a cash outflow, you have to again subtract it one more time where? In the financing activity. Because earlier what you subtracted, you cancel the subtraction by adding. So again you have to subtract because this is cash outflow. So I have to subtract in the finance activity. Sometimes the question will tell that underwriting commission is due but not paid. So in segment 2 you'll add back, and finance cost you will not subtract because money is not paid. See, underwriter commission, what question is telling is that how will the person come and do the work without the money being paid in advance? That underwriter is my friend. He's my friend. I told boss, I don't have money. You do all the minimum subscription, all the work over. Later after 1 year I'll pay. He said okay. So now underwriting commission outstanding where? In my current liability. Understood? No? No problem. Okay. Now. Same thing, interest paid on debenture. Interest paid on debenture. Debenture, bank loan, bank overdraft, all this is finance activity. If it is paid, minusing is okay. But minusing is in the operating activity is wrong. So to cancel that, what am I supposed to do? Add back. And since it is paid, we have to minus it from the financing activity. If it is not paid, I will not minus in the finance activity. Any problem in this? Any difficulty in this? Next. I never expected I'll take so much time to finish non-cash and non-operating. Only expense item. Now we're touching income item. Now question based on that. Today target was segment 2 and segment 3 also. My goodness. If you do like this, how will I complete? Now, next is less non-cash and non-operating item, which is income in nature. Like how in the expenses we can have non-cash and non-operating item. In the income also there could be non-cash and non-operating item. So can we first focus on the non-cash item? Non-cash here only one item. What is it? Non-cash here only one item is possible. The provision that you've already created earlier, no? Yeah, gain is also possible, but that is non-operating. I'll tell you why. Excess provision written back. The provision for bad debt what you wrote off earlier, from that no money is going to come. So the provision what you created, we need to reverse it. So reversal of the provision for bad debt, reversal of the provision for doubtful debts and discount. This topic where did you study? Foundation. Where in foundation? Final accounts and adjustment of final accounts of non-manufacturing entity. Forgot, eh? Provision written back. Oh my God. What will I do with you guys? This is my provision ledger. Balance brought down is 10,000. What does it mean? This means that last year we had a fear that this money may or may not come. Prudence concept says that record for your anticipated loss. If you're anticipating this money is not going to come, so last year what entry you recorded? P&L account debit to provision for doubtful debt. That is how this opening balance came. Now current year at the end you're telling that my provision is only 8,000, which means balance 2,000. There is no fear. Which means that 2,000 rupees you're going to write back. Means what? To P&L. What is entry? Provision for doubtful debt to P&L. For creating provision, loss, this entry. For reversing the provision, gain, this entry. Current year you're telling that now I'm not doubtful to the extent of 2,000 rupees, which means that money is going to come. If that money is going to come, the loss that you have earlier written, that you need to reverse it. So entry is now reversed in form of gain. It is CA inter topic. This is CA foundation topic. So now this is called as reversal of the provision. Or here if I have to go with the language, it is excess provision return back. The provision which you have excessively created. 10,000 rupees you created. Actual provision in the current year is how much? Only 8. So 2,000 extra provision that you created, I'm now reversing that. So that is what? Gain, no? Yes or no? So this is added to your income. To cancel the addition, what am I supposed to do? Minus. And did you receive any money for cancelling this gain? No. Is it a cash inflow? No. You have added in your other income. To reverse, what am I supposed to do? Subtract. Any problem? Next, all these are non-operating item. Now let's talk about interest, dividend and rent received first. Interest, dividend, rent received, cash inflow, no doubt. But this is of what activity? Investing activity. But where have you added all that? Under operating activity. So from the operating activity, add item if to remove. Add item if I have to remove, what should I do? Subtract. Hence these items are subtracted. Since this is received, you'll add back again under which activity? Investing activity, because interest is out of your investment. Dividend is out of your investment. Rent is out of your investment. Interest received out of your investment done. Dividend received out of your investment done. Rent received out of your investment on the assets. So all this is cash inflow in the investing activity. So in segment 2, you will minus and add back in investing activities. Any problem in this? No problem. Wonderful. Similarly, gain or profit on sale of fixed asset. Let me give an example for this. 40,000 worth of asset. 40,000 worth of asset. You've sold it for 50,000 rupees. So you sold at a profit of 10,000 rupees. So this 10,000 is gain on sale of asset. Where do you record? In the other income. In the other income. Now, this 10,000 rupees, no doubt, this is cash inflow. Cash inflow is there. 10,000 money I received. But what we do is, this entire 50,000 we have the habit of recording as proceeds from sale of asset bar investment. Where do we record this 50,000? In the cash inflow of the investing activity. Correct, no? Proceeds from sale of asset, where do you record? Cash inflow from the investing activity. Which amount do you record? The entire money that I received in the bank, I record. So in this 50,000, there are two components. 40,000 is cost component, 10,000 is profit component. So this 10,000 is already captured in the investing activity. No? So why one more time to capture this 10,000 rupees in the operating activity? So it is dual time getting captured. So now I'm removing this from the operating activity. This is sitting where? In the other income. It is added in the other income. To remove, what am I supposed to do? Subtract, minus. Now the logic is clear or not? Online people, is the logic clear or not clear?
Yes, sir.
Yes, sir.
Now, when I do segment 2 adjustment for non-cash and non-operating item, the amount of profit what I get is called as operating profit before working capital changes. Which means this profit what you're getting, is this the final cash profit? No, in this also adulteration is done. In this also few more adjustment is yet to be done. That adjustment is done in your segment 3 with the help of current assets and current liabilities. But before going to segment 3, I want to work out few questions based on segment 2. So last class we completed question till where? 19 was done? Okay. 21 we did? 21 we did? 21. We didn't do it? Okay. Can we do 121 question? After 21, we will do next. This is segment 2 questions. Let's do one nice question. 21 is nice question. Let's do it. From the following information, calculate the net profit before tax and extraordinary item. Guys, this item comes where in the cash flow statement? Cash flow from operating activity. In cash flow from operating activity, how many segments are there? 5 segments. Out of that, which segment is this? This is segment 1. Okay. Now, surplus is given. Surplus opening and closing will affect which segment of the cash flow from operating activity? So this will affect segment 1. Dividend paid, which is nothing but the proposed dividend of previous year. This will affect my segment 1. Interim dividend paid during the year. Segment 1. Transfer to reserve. Segment 1. Provision for tax during the current year. Segment 2. ஏன்டா 1க்கு அப்புறம் 2 ன்னு சொல்லிட்டு அப்படியே ஃப்ளோல போட்டியா? Segment 1. Refund of tax. Segment 1. Loss of inventory due to fire, extraordinary item. Segment 1. Segment 2 எதுக்குமா? 1. Insurance claim received for above loss. Insurance claim received from above loss. Abnormal gain. Segment 1. All these are segment 1 items. So net profit before tax and extraordinary item. Can we do it? Calculation of net profit before tax and extraordinary item. Please tell me, in this question, have they given the net profit before tax and extraordinary item directly? Directly they're given. Open your mouth and respond. Directly given? No. Sir, in this question, we have to calculate net profit using top to bottom approach, sir. No? Which approach? Bottom to top approach, also called as reverse mechanism. In that, what is my starting point? Surplus. என்னடா ஆச்சு உனக்கு? நல்லா தானே இருந்தேன். In the calculation of net profit before tax and extraordinary item, how will the working note 1 come? Huh? Closing minus opening or opening minus closing? Closing minus opening. How much is closing balance? 118 minus 50,000. How much? 68,000. என்ன பண்ற? From here நேரா கோயில் போயிடு. கோயில் போயிட்டு இங்க வந்துடலனா பூசாரி இருப்பார் இல்லையா? சுத்தி விட்டு சொல்லு கொஞ்சம். Now next, go in reverse. Reverse. What should I do? Add or minus? Sir, already equity dividend is what you call apportioned, subtracted. Now to cancel the effect of that, we have to add back. So add final equity dividend. Which year? Previous year. Is it there in this question? Yes. Who said no? Yes, sir. Where it is? This one. How much? 36,000. Okay. Then preference dividend is there? Not there. Interim dividend? Yes. How much? 45,000. Interim dividend 45,000. Then transfer to reserve, how much? 50,000. Transfer to reserve 50,000. What is the total? And what is this called as? Profit after tax, net profit after tax. How much? 1,54,000. Okay. Add back. What should I add? Provision for tax earlier is subtracted. Reverse, we have to add back. Provision for tax. Which year? Which year? Current year. How much? 1,99,000. Donkey fellow. Who said 154? New say that I'm going to put it. 190. 99 is it? Okay. Now, next, less refund for tax. Which year? Previous year. How much? Only 1,500. Chiller fellow. எடுக்கும்போது மட்டும் அப்படியே கும்பும் 75,000 எடுக்க வேண்டியது. கொடுக்கும்போது only 1,500. Okay, how much? Balance. And this is called as what? Net profit before tax. How much? 2 lakh 73,000. Then 72,500. Then add. So extraordinary item gain in nature would have been, sorry, extraordinary item loss in nature would have been subtracted. Loss on inventory, 1 lakh loss would have been subtracted earlier. To cancel this, we have to add back. So add loss 1 lakh. And this insurance claim received would have been a gain. This would have been added. To cancel this, we have to subtract. So less insurance claim received. How much? 50,000. What is the balance? 3,22,500 is your net profit before tax and extraordinary item. In this, we have to remove the adulteration using segment 2. Segment 1. Segment 2 and segment 3 does the job of further filtration. Further filtration in segment 2 and segment 3. But in this question, they asked only net profit before tax and extraordinary item, and hence we got the answer. Any problem? Any problem? Online people, are you all there? Gaurav, Haricharan, Harini, Jayesh,
Sir.
Kaushik,
Yes, sir.
Nishant, Reshma, Revati, Shushmita, Tarini.
Yes, sir.
Okay. Illustration 23. From the following information, calculate operating profit before working capital changes. What is this, sir? Oh my God, this is. Actually, you have to do adjustment for segment 2 and segment 3, but segment 3 adjustment is not there here. So segment 3 adjustment is 0. That is how after segment 2 and segment 3 only you get operating profit before working capital changes. No, before that. Sorry, before that only. So segment 2 adjustment only. Okay. Only segment 2 adjustment. Okay. Net profit before tax and extraordinary item 223. Directly given, or should I use top to bottom approach or bottom to top approach? So directly given. So can I say this is segment 1? Okay. Depreciation, segment 2. Interest on borrowing, segment 2. Goodwill amortized, segment 2. Loss on sale of machinery, segment 2. Premium on redemption of debenture. Premium on redemption of debenture. Premium. Come back. I knew we'll make this mistake. Where is that? Where is that fellow? Donkey fellow. In this journal entry, the last part goes to P&L. Premium is your other current liability. So this will not affect your segment 2. This will not affect your segment 2. So this is to be ignored. Correct? No, premium redemption is a liability item. Segment 2 does not affect my assets and liabilities. It is purely coming from the P&L item. All these segment 2 are where? Recorded in P&L. That is what is reversed now. So premium on redemption of debenture will not come into picture because this is the premium written off in the current year. No, this is not premium written off in current year. This is the liability which is there in the balance sheet already. Loss on issue of debenture is already be recorded earlier years. So in the earlier years, the entire loss has been taken care of. Let's suppose this is the question of financial year 24-25. Okay. Actual issue of debenture happened when? In 21-22. In 21-22, the entire loss is being written off. So this would have affected the cash flow of 21-22. That year, when the loss was recorded, you created one premium. That premium only is this premium. So premium is a liability item. This will close when? When the money is paid. On the maturity of the debenture, you repay the money back. No. That time, what is the repayment entry? Debenture account debit, premium or redemption account debit to bank. 100 rupees debenture, 20 rupees premium on redemption, and 120 rupees money goes from your bank account. So this is a liability item which will get closed only upon the payment of the money. We are not paying the money in the current year. So this is purely a liability part, not affecting your cash flow statement. Is the logic clear? Now, interest on dividend received or investment. Segment 2. Profit on sale of investment. Segment 2. Now, what are they wanting us to do? Calculation of operating profit before working capital changes. Calculation of operating profit before working capital changes. This comes after your segment 2. So what is segment 1? Net profit before tax and extraordinary item, which is how much in the question? 2,23,500. Now add non-cash and non-operating item, which is expense in nature. Now please tell me in this, which is my non-cash and non-operating item and which is my expense and income item? Depreciation, non-cash and expenses. Interest on borrowing, non-cash. Nothing mentioned, it is paid. Nothing mentioned means it is paid. Means it is non-operating and expense and paid. Goodwill amortized, non-cash and expenditure. Loss on sale of machinery, non-cash and expenditure. Interest and dividend received, non-operating and income in nature. Since it is received, you'll add back in the investing activity. Profit on sale of investment, non-operating and income in nature. So you'll reverse here and add back in your investment activity in form of sale proceeds. The entire sale value will record, not this. Cost price plus profit put together, the entire sale value is added there. Now, add a non-cash and non-operating item. Minus what is the first item? Depreciation. Sir, why are you minusing? Sir, depreciation is already subtracted. That is, when I got this 223,500, no. How did I get this? From my total income, I subtracted depreciation. Is it right? No, because I had not paid any money for that. So to cancel that, what am I supposed to do? Add back. So add depreciation. How much? 42,000. Guys, are you able to understand why are we adding? Is the logic clear? By adding will not help you. Similarly, goodwill amortized. How much? Goodwill amortized 8,400. We have to add back. We can go anything, that's okay. Interest on borrowing. Interest on borrowing. I'm assuming this is paid. Interest on borrowing paid, cash outflow. In this 223,500, it is subtracted. Since it is cash outflow, I'm okay with it. But cash flow statement AS3 says what? This is not belonging to operating activity. This is belonging to financing activity. So what you have subtracted is right, but it is in the wrong place. To cancel this by giving addition and subtract it where? Under financing activity. So now I have to add back interest on borrowing paid. Goodwill is 9,300. Okay. Goodwill amortized 9,300. And what is interest on borrowing? 8,400. Okay. Next. Loss on sale of machinery. How much? 9,000. We have to add back. This is already subtracted earlier in the other expenses. To cancel, we have to add back. So loss on sale. How much? 9,000. We have added back. Okay. That's all. Now, next is less. Non-cash and non-operating item, but of what nature? Income or gain in nature. Income or gain in nature. Interest and dividend received. Received means what? Money received, cash inflow. Received means cash inflow. It is added in your net profit. Adding in net profit is right, but what is wrong? Place is wrong. This is your investment activity. So cancel this addition by subtracting it and re-add it where? Investing activities. So less interest and dividend received. Interest and dividend received. How much? 13,000. 13,800. Okay. Profit on sale of asset is already included in the other income. To cancel it, we have to minus. So less profit on sale of investment or asset? Investment. How much? 6,000. And now always remember to put the less items in the bracket so that when totaling you don't make mistakes. 2 lakh 70 to 400. And this is called as operating profit. This is now operating profit. Why this is called as operating profit? Why? Because from this all the non-operating items are removed. Here I cannot call this operating profit because in this operating profit even non-operating profit is included. Now when I eliminated non-operating items, I got operating profit. But this is still not the final profit because in this we have items related to working capital, means current asset and current liability. So there are some items in form of current asset and current liability, which is of income and expense in nature, which is still included in this. That also we have to eliminate. So this is called as operating profit, but before working capital changes. So now from this we have to do adjustment for segment 3. Any other segment 2 questions? Can we check? Next is 24, which is segment 2 and 3 put together. So now I can take a quick break of 8 minutes. It is 6:52. So 7 o'clock sharp, we'll start with segment 3. Yes, people? Welcome back from the break. Now, let's continue segment 3, people. So what have we done so far? Segment 1 in the last class, and in today's session, segment 2. Now comes segment 3, adjustment for current asset and current liability. Now, before I start explaining, I've taken one small example for all of you. So this says that your revenue from operation in total is 1,50,000 rupees. Your revenue from operation in total is how much? 1,50,000 rupees. Why? This is not coming. The breakup of this is cash sale 1 lakh, credit sale 50,000. Expenses, which expenses? Cash expenses 120. So my net profit before tax and extraordinary item is 30,000 rupees. Is this cash profit or is this is cash and non-cash profit put together?
Both put together.
How do you say so? Sir, if you see in the balance sheet, the previous year return was 0. Current year is 50,000. And this 50,000 and this 50,000 exactly matching. Means what? Current year, in this 150, 1 lakh is actually cash received because of cash sale. Balance 50,000 based on the accrual concept recorded the income. But I have not received it. So in this 30,000 rupees, 50,000 what is received is actually not received. You agree with me?
Yes, sir.
Let me make, for simplicity's sake, let me make this 4 lakh. So 4 lakh plus 450 is how much? Sorry, 4 lakh plus 50 is 450. Minus 120 is how much? 330. I'm just changing the question a little bit slightly. Now clear? So out of this 450, 4 lakh is received because it is cash sale. 50,000 is not received. Now the problem is you will not be given this information in the question. Nothing is available. None of these information is available. What is available to you?
Data.
Information that is available to you is
Statement of P&L and balance sheet.
this one. Net profit before tax and extraordinary item 330 is given, and the balance sheet where debtor is 50,000 is given. Only these two information is present. Are you able to follow? Now you're supposed to calculate the cash flow from operating activity. Now, what is my starting point? To calculate the cash flow from operating activity, what's my starting point?
Net profit before.
Cash flow from operating activity. Under that, my first segment is net profit before tax and extraordinary item, which is how much?
3,30,000.
3,30,000 rupees. Now, in this, if there is any non-cash or non-operating item, that I have to remove. There is no non-cash or non-operating item. Do you agree with me? Expenses is cash expense paid. Cash sale is cash sale. Credit sale, though it is non-cash in nature, you don't adjust this in segment 2. This is separately adjusted in segment 3 because the information pertaining to this will not be given in your T&L. They'll be giving this information indirectly through your balance sheet item. For example, depreciation, interest paid, interest received. They are given that information where? In the P&L. So from the P&L, we'll take and put in segment 2. So in all the segment 2, all the P&L related items will come where it is apparently visible in P&L. Now, revenue from operation only is totally visible, no ma? In your P&L. Will you ever split and show cash and credit sale in the P&L? No. Where does it come? In the notes to accounts. So notes to account is my additional information. So any information that is picked from the additional information should be going to your segment 3. So that comes to you in form of data. So if any information is directly given, it goes to your segment 2. If any information pertain to P&L, if it is routed through your current assets and current liability, it goes to your segment 3. So I'm telling you that in this 330, I still have 50,000 worth of non-cash item. But you will not put this in the non-cash item of segment 2 because your cash flow statement says that take in segment 3 under current asset and current liability adjustment. How, sir? Because credit sale is something which gets reflected in your debtor. Last year debtor was 0. Current year it became 50,000. What does it mean? Which means that in current year you have sold the goods to debtor on credit for worth 50,000. So in current year credit sale is 50,000. As per accrual concept, Sumanyu, 50,000 rupees is your income which is included in your revenue from operation. So in this 450 revenue from operation, 50,000 rupees of credit sale is included. For that, did you receive money? The answer is no. And hence we have to minus. How much you have to minus? 50,000 rupees we have to minus. So less non-cash or non-operating items, which is of expense in nature, is 0. Add back non-cash and non-operating item income in nature. No, sorry. Expense in nature we less. Income in nature we add back. That is 0. Now this 3,30,000 is called as operating profit. I said ulta, sorry. Add expense in nature less income in nature. Now okay. Now this is called as operating profit before working capital changes. Working capital means what? Current asset and current liability. Which means in that I meant to adjust for current asset and current liability. Please tell me debtor is what? Current asset. So now add increase in current liability and decrease in current asset. So people by heart, we should not by heart, we have to understand the logic. See, in 12th stand, if you by heart, I have no problem. Though I did not make you by heart there. There also I gave you the logic. But at least now you cannot still by heart because as a CA, you should understand if I'm adding this or subtracting this, what is the logic behind it? The logic is very essential because tomorrow your junior can ask, your boss can ask, any peer people can ask. So you need to know the logic. So add increase in current liability, decrease in current asset, less decrease in current liability, increase in current asset. So here please tell me debtor from the previous year, if I compare, it is increasing or decreasing? It is increasing. It is increasing. Since what are we supposed to do? Less. Minus. Why minus? Because this 50,000 is included in my revenue from operation. If this 50,000 is included in my revenue from operation, then this also got included in my total income. If this got included in my total income, then it is also included in my net profit before tax and extraordinary item. But for this, did you receive paisa? No. Is the cash inflow there? No. But this is included in that. To cancel this inclusion, we have to minus. So hence, minus debtor value. How much? 50,000 rupees. So what is my cash profit actually? 330. It's not 330. 330 is it? Yeah, 330 minus 50 is how much? 280. 2,80,000 rupees is your cash profit. 2,80,000 rupees is your cash profit. Is it right? Yes or no? Yes, now you can also cross it by yourself. Please tell me, cash sale is 4 lakh. From that, if I minus cash expense 120, 4 lakh minus 120, what do you get? 2,80,000. Do you agree with me? Exactly, is it matching or not matching? Yes. Perfectly matching. Now you might tell that, sir, then this 50,000 we can take directly from my notes to accounts now. See, please tell me, is it necessary that all the debtor sale that you have done, all the credit sale that you have done, the money should not have been received? No. In this 50,000, there is a possibility that one customer would have paid 10,000 rupees. So how much could be possibly outstanding? 40,000 could be possibly outstanding. Now I'm changing the question. I am telling my debtor is now how much? 40,000. So how much worth of goods have you actually sold? You have sold 50,000 worth of goods. I'm just erasing all of that. 1 second. I'm just making you understand the logic. Cash sale 4 lakh. Credit sale 50. Total revenue 450. In this credit sale 50,000, 10,000 received. How much is not received? 40,000. So debtor outstanding 40,000. Now please tell me, If I by default, if you say, sir, this is added, no, minus 50,000, will it not be wrong? Can I minus the entire credit sale? No, I have to minus only that portion of credit sale for which money is not yet received. So that information will come to me better if the data taken from here or if the data taken from here.
Balance sheet.
Now, did you understand why they split in the segment into two parts? In segment 2, some detail can easily fit. This information, though it is available in the P&L, in the notes to accounts, I cannot take in segment 2 because this is not the complete information. The complete information is what? Sir, 50,000 is credit sale. In that 10,000 received, 40,000 not received. So debtor gives me a better picture. So now when I subtract, will I subtract now 50,000 or 40,000? 40,000 only I have to subtract. So what is my revised profit? Operating profit is how much? 2,90,000 rupees. Now can we cross check the answer? 4 lakh is cash sales. Money received or not received? Received. Credit sale 50,000. In that, how much is money received? 10,000. So how much total money received? 410. How much is cash expense? Minus 1,20,000. So what is the balance? 2,90,000 is the cash balance. Exactly matching or not matching. So this I did only to prove you that this information I cannot take it from the P&L. It is not reliable. Hence, I'm not putting in segment 2. I'm taking this information from where? Balance sheet. So these are my asset and liability related information. So for that, cash flow statement is created a separate segment 3 called as adjustments for working capital changes. So this 330 what you got is operating profit before working capital changes. Now when you do working capital changes, you get operating profit or cash generated from operation. Cash generated from operation. So after these adjustments, the data what you get is called as cash generated from operations. By doing the operation, core business activity, I generated so much amount of money in cash. I generated so much amount of income in cash. Are you able to follow? Now, why? What is the meaning of decrease, increase, decrease, increase? I'm meant to discuss. I'm just trying to put a seed into your mind that why this 40 and 50,000 is not coming in segment 2, why it is coming in segment 3. I'm putting that thought process in your mind. Is that clear or not clear? Second cheat, less increase in current asset. Increase in current asset, you said less. Now, why it is less? Because this 40,000 is included in my income, for which money is not yet received. So since money is not received, this should not be added. To cancel an add item, we have to minus. So second logic for why increase in current asset is subtracted. Now, with the help of the next question, I'll make you understand why decrease in current liability is subtracted, increase in current liability is added, and decrease in current asset is why it is added. I'll explain through next question. If this is understood, can I go to next question?
Yes, sir.
Online people, can I go to next question?
Yes, sir.
Yes, sir.
I might take probably 45 minutes from here, minimum. Might go max to max 1 hour. Be mentally prepared. Today's class till 8:30. So if you want to inform your parents, anybody, please put a message. Illustration 24. Calculate cash flow from operating activity from the following details. Calculate the cash flow from operating activity. In operating activity calculation, how many segments are there in total?
5.
5 segments. First segment, net profit before tax and extraordinary item. Second segment, add non-cash and non-operating item, expense and loss in nature, minus non-cash and non-operating item, income in nature. With that, what will I get? Operating profit before working capital changes. Third segment, adjustments for current assets and current liability. With that, what do I get? Cash generated from operation. Wonderful. Now let's have a look at this question. In this question, all the 3 segments could be there. So be vigilant which item will go to which segment. Please tell me, is there something called a segment in your AS3? It is for our understanding. We are telling segment 1, 2, 3, 4, 5 because it becomes easy when I do the question. Otherwise, there's nothing called a segment in your AS3. Calculate cash flow from operating activity. Surplus is given, people. 31st March 21 looks like previous year, and this is current year. So you're preparing cash flow statement for which financial year? 21, 22. Previous year, your profit is 2 lakh. By the time you came at the end of the current year, it became 3 lakh. How? Sir, I worked hard in the current year. Sir, I made 1 lakh rupees profit in the current year. So what is my current year's profit? 1 lakh rupees, which is after appropriation or before appropriation? Always closing and minusing is after appropriation. After minusing those 4 items only, we get the closing surplus. So with this, we have to add back those 4 items, add back those provision for tax, etc., to get the net profit before tax and extraordinary item. Here, net profit is not directly given. Surplus is given, which means what approach they want us to do? Which approach? Bottom to top approach. Wonderful. So please tell me, surplus will go to which segment? Segment 1. Wonderful. Bills receivable. Current asset it is. All the current asset and current liability in segment 3. Accumulated depreciation. Accumulated depreciation. 3 lakh rupees was the depreciation. What is the meaning of accumulated depreciation? Sir, 10 lakh is the cost of the asset. Accumulated depreciation 7 lakh. WDV is how much? 3 lakh. This is cost. This is accumulated depreciation. This is WDV. Cost means what? The money incurred to buy the cost. Money incurred to buy the asset. Purchase value of the asset is 10 lakh. What is 7 lakh rupees accumulated depreciation? What does it mean?
Total used value of the asset.
Out of 10 lakh, 7 lakh worth of asset you have used so far. Let's suppose this asset is used for 5 years. For 5 years, I'm using this asset for 7 lakh rupees. Means in this 5 years, I've used the asset to the extent of 7 lakh rupees. What is the meaning of this 3 lakh? So remaining 3 lakh worth of asset, I haven't used it. I have not used remaining 3 lakh worth of asset. Are you able to follow? So here, accumulated depreciation in the beginning of the year is 3 lakh. By the time you came to end of the year, it became 320. Means what? In the current year, further depreciation increased by 20,000 rupees. Further depreciation increased by 20,000 rupees. Now you will say, sir, this is your balance sheet item. No, this should go to segment 2. Sorry, you will say segment 3 should go. But your cash flow statement takes this to segment 2. Because depreciation related item is a non-cash item. So it goes to your segment 2 only is the classification. Am I loud and clear? See, definitely there can be a debate between segment 2 and segment 3. I am telling you, who gave the format, boss? Did the AS3 give the format? Put this in segment 2 and segment 3. You are free to put in whatever you want to put it. They just gave a format. Even if you interchange and write, nothing wrong. But our institute follows one norm. Like how in CBC you followed one technique. No, here one technique we have to follow. That these items goes in segment 2. These items will go in segment 3. So to ensure the uniformity, we will take this to segment 2 only. Are you able to follow? I am telling you segment 2 and segment 3 in the reality can be interchanged. Because there is no format given by AS3. Only an example is given. Are you able to follow? But we are practicing that these items should go to in segment 2. This item will go to segment 3 so that in exam there will be uniformity. So everybody presenting the answer will have the uniform answer. That is why we take this to segment 2. So depreciation means go where? Segment 2. 3 lakh to 320 means current year depreciation increased by 20,000 rupees. So this will be segment 2. Any problem?
No, sir.
No problem. Next is outstanding rent. Outstanding rent is what? Current liability. It is current liability. Bills receivable is current asset. So this will go to segment 3. Prepaid insurance is current asset. Segment 3. Goodwill. No, you will not decide like that. Goodwill, there are two information. Listen to me very carefully. Previous year, current year. Previous year, goodwill was 2 lakh. Current year, goodwill became 2,20,000. So goodwill is increased or decreased? Goodwill is increased. So goodwill, when does it increase? Only when you purchase goodwill. The more goodwill you buy, the goodwill will increase. So increase of goodwill, purchase of goodwill is nothing but your 20,000 rupees investing activity. Do you agree with me? All the investment done in tangible and intangible asset is what activity? Investing activity. So whenever goodwill, whenever any intangible asset you come into picture, look at the data. Whether the goodwill is increasing or decreasing compared to past year, look at the data. If compared to past year in the current year, if it is increasing, it is my purchase of goodwill. Investing activity. On the other hand, this 2 lakh worth of goodwill, it becomes 1,70,000 means the goodwill is written down by 30,000 rupees. So this is amortization of goodwill. So if goodwill value falls, it is amortization. Goodwill value increases, it is purchase of goodwill, investing activity. Now please go through the question and tell me, is the goodwill value increasing or decreasing? Previous year goodwill value is how much? 2 lakh. Current year how much? 160. Goodwill value increased or decreased? Decreased. So what is it?
40,000.
Are nahi, what is it? Amortization. So segment 2. So 40,000 fall in the value of the goodwill is your amortization. What is the journal entry for amortization? Amortization account debit to goodwill account. Very good. Inventory is your current asset. So this will affect your segment 3. So how many segment 1? 1. Segment 2? 2. And remaining segment 3. Let's do it. Had the goodwill being increased, then that would have come in your investing activity because it's purchase of goodwill. Not segment 3. Here 40,000 goodwill will not adjust in segment 3. You'll take in segment 2 because depreciation, amortization by default, we have a habit of taking to segment 2. So you'll take it to segment 2 only. Now clear? Now heading is what? Cash flow from operating activity or activities. Particulars, rupees inner column, rupees outer column. Now, net profit before tax and extraordinary item. How much it is? So not given, say we have to calculate. So working note number 1. Working note number 1. Calculation of net profit before tax and extraordinary item. First point is what? Surplus. What is the formula for surplus? Closing minus opening. What is closing? 3 lakh minus 2 lakh. So 3 lakh minus 2 lakh. How much it is? 1 lakh. Any final dividend to be added? Proposed dividend to be added? No. Interim dividend to be added? No. Reserve to be added? No. Provision for tax to be added? No. Refund tax to be subtracted? No. Extraordinary item to be added and subtracted? No. So everything is 0, 0, 0. So this itself become my net profit before tax and extraordinary item. Is this the pure cash profit? No. In this, adulteration is there. So we'll remove the impurities through segment 2 and segment 3. So now segment 2. Add non-cash or non-operating item. Which is of which nature? Expense in nature. Non-cash and non-operating item, which is of expense in nature. Expense and loss. In that we have 2 items. Depreciation, people. In this 1 lakh you got after minusing depreciation from your income. Minusing is okay, but did you pay any money for that? No. I should minus only that item for which money is paid. But I subtracted depreciation for which money is not paid. So to cancel the impact of minus, what am I supposed to do? Add back. So depreciation is added back. How much it is? 20,000. So in bracket, please write 320 minus 3. 3 lakh is the depreciation until previous year. By the end of the current year, it became 320. How? Because current year 20,000 depreciation got added to your provision for depreciation account. Anybody who does not know the concept of accumulated depreciation ledger still don't know. Everybody is aware? Which Mahatma still doesn't know how to prepare the ledger of machinery account, how to prepare the ledger of depreciation account, how to prepare the ledger of provision for depreciation account, how to prepare the ledger of asset disposal account. If these 4 are not known, no, your life is going to get super duper screwed. No, super duper screwed. Not now, next class. I will do a recap. I'm not saying I'll not do a recap, but the recap is going to be fast. Recap means what? Revising or recollecting what is already known. If anybody is studying for the very first time, gone. Next is what? Amortization of goodwill. Amortization of goodwill. What is the opening balance? 2 lakh minus 160. How much it is? 40,000. Now I don't have any non-cash and non-operating item income in nature. Do we have? No. So this is now called as operating profit before working capital changes. How much it is? 3 lakh. 1,60,000. Now we have to do adjustments for current asset and current liability. Add increase in current liability and decrease in current asset. I'm leaving some 4-5 lines because I don't know what item is it. Less decrease in current liability and increase in current asset. Okay, wonderful. Let's go one by one. Can we start with bills receivable? Open your ears. Open your eyes. Open means not literally open and keep it. Open means listen. In the joke, Siri. All of you. All of you, here. Loudly, clap. Loudly. Nice. Your hands in pain. Not monkey clap like this. Nice. Okay. Anybody still feeling sleepy? Anybody feeling sleepy? No. If you say I'm feeling sleepy, I'll make you do monkey clap like this because it'll pain even more nicely. More pain, more brain will become active. Anybody is ready to start try monkey clap? No. Okay. Now bills receivable. Current asset from 140 it became 180. Increase in current asset. Add or minus? Less. Reason tell me. So that you should say, sir. You only took CA fees, inter fees. You should only tell. Why are you asking us? We don't. Donkey fellow. Studying CA, no. At least you should know what is the logic behind this.
You would have made a sale, but we didn't receive some money. So it is not income. It is
ஒண்ணுமே புரியல எனக்கு இப்படி டீச் பண்ண எனக்கு ஃபீஸ் கொடுப்பீங்களா bills receivable last year 140 current year 180 what is the meaning of bills receivable so bills receivable is nothing but these are my debtors but these are those debtors who have given me in writing a promise to pay means these are more secured debtors bills receivables are more secured version of debtors to balance brought down how much 1,40,000 when does bills receivable come into picture sir when the credit sale happens so when the credit sale happen what is the journal entry debtor to sale debtor account debit to sale imagine 40 okay this entry is passed when the goods are sold when the goods are dispatched from our premises when it goes out stock is going out along with that bill is going out invoice along with that we'll send one document called as bill of exchange now this three items will be delivered to whom customer debtor and in that he will keep the stock with him he will keep the bill with him and bills receivable is there now he has to sign and give it back to us the moment he signs and give it back to us now this debtor has become a secure debtor why because on the due date if this person does not pay the money with this document I can drag him to the court and recover the money in a faster and a better manner so the moment the person is signing the document and giving back to you, this debtor is no longer unsecured. He becomes secure debtor and we give him a new name called as bills receivable. So this debtor is unsecured. So I'll cancel this and create a new secure debtor called as bills receivable. So debtor means unsecured. Bills receivable means secured. Debtor unsecured is in debit. To cancel I have to give a credit. So to debtor, how much? 40,000. And bills receivable, 40,000. Any problem in this?
No, sir.
Clear? Now, in the bills receivable account, to debtor 40,000 rupees is added. Any problem? Now, please tell me what is my closing balance? To balance cat on is 180. Okay, buy. Okay. Neenu buy 2 layer kepa. Now, buy balance cat on 1,80,000 rupees. Now, this is the information given people. 1 lakh was the outstanding balance in the beginning of the year. By the time we came to the end of the year, it became 180. So in the current year, your bills receivable is increased by 40. So when did this increase? Upon credit sale. If this is credit sale, can I say this sale would have been added to your revenue from operation? If this 40,000 is included in sale, I'm telling this would have got included in your revenue from operation. If that 40,000 is included in your revenue from operation, that would have been included in your total income. If that 40,000 is included in your total income, then this 40,000 is included in your net profit before tax and extraordinary item. Did you receive paisa for that?
No.
It is included in that. To remove, what am I supposed to do? Minus 40,000 rupees. Any problem? So less debtor value 40,000. Don't write. Wait. And my explanation is not over. My explanation is not over. Wait. This is one assumption. Second assumption possible. Which bills receivable is due for 1 year? Are you trying to tell me in this 180, you have a bill whose bill value outstanding is for 12 months, 14 months, 16 months? Common sense. Always when the bill is there, bill is for 1 month credit, 2 month credit, 3 month credit. So are you trying to tell me that in the current year, sir, 140 was the bill opening balance, current year also paisa did not receive, so closing balance is full 180. Will you wait for 1 year to receive the money from your customer? No. Generally, how it is, this entire 140 is money is received in the current year. The entire 40,000, 140 is money received in current year means what is the receipt entry? Very good. So now, bank account debit to bills receivable. So by bank, how much? 140. So this is your cash inflow. Do you agree with me? So technically, your balance should be zero. No? In our opening balance is 140, closing is 140. Sorry, opening is 140 and money received 140. Closing balance should be zero. If closing is there 180 means current year sale is how much? To debtor, current year credit sale is 180. Now come to the same concept. Current year debtor 180. 180 is what? Sale. This is included where? Revenue from operation. Means also included where? In your total income. Also it means what? It is included in your net profit before tax and extraordinary item. So this is included. But money received? On this 180 money received? No. So any inflow which is not there and still included in net profit before tax and extraordinary item, we have to remove by minusing. Minus 180. Because this is a non-cash item. And in this debtor, can you say this 140 is received? This 140 received, anywhere did you include in your revenue from operation in current year? No. This 140 is nothing but opening balance, which means what? This 140 is included in the previous year revenue from operation. So I am telling that this 140 money received is not included in your current year revenue from operation. Do you agree with me? Since this 140 is not included in current year revenue from operation, this is not included in your total income. Since this is not included in total income, this is also not there in your net profit before tax and extraordinary item. But this is cash inflow. Of which activity? Operating activity. Should I add or not add? Yes. So add back how much? 1,40,000. So what is my net amount to be subtracted? Net is 40,000. You take any permutation combination, you will be justifying why this 40,000 is subtracted. I gave you two possibilities of why this minus 40,000 is subtracted. Two different situations, but at the end answer is one same answer. You can go to nook and corner. Nobody will give this explanation. Take it from me. Even in the inter-level, forget 12th level, inter-level I'm telling, nobody has got the patience to sit and teach. For this extra time is going. Who's got extra time? If I just tell you, this is add and this is minus, game over, no? Why should I put the concept into your head? Why I'm putting the concept in head is because tomorrow, when you go for articleship, if they ask you, why are we adding this? You will say, we didn't know. That time, you will be damaging your image. And because of that, my image also getting damaged. Oh, Pratik sir didn't teach. Oh, Kalpish Academy is not teaching conceptually then. And the பேரே எனக்கு வேண்டாம். So extra class வேணா நான் எடுத்துப்பேன். Extra time you tell, I'll do it. Extra hard work also, I'll do it. But name should not be spoiled. More than name, nothing is important in life. Name is always the first. So your quality, you should be known by your name. Quality, CA ra pakka CA, genuine CA. That is the name you should get in the market in future. Not dummy CA, who's become CA but has got no knowledge stuff into it. That's the reason every single point I'm stressing and making you understand again and again, again and again, again and again. You should go to an extent where when you're in the articleship, no, in the offices, you should be sitting and teaching your seniors. Anna, இது உனக்கு தெரியாத எதுக்கு ஆட் பண்றோம்ட்டு, like that you should ask. நான் சொல்லி கொடுறேன், come. Now tell me, this is clear or not clear?
Yes, sir.
Can I go to the next point?
Yes, sir.
Now you understood why I said I'll take class till 8:30. ஒன்னுக்கே எவ்வளவு நேரம் ஆச்சு. இன்னும் எவ்வளவு இருக்குமா? Outstanding rent, prepaid expenses and inventories. Perfect explanation I have for each of them. Now, outstanding rent means what? Expense incurred. Do not paid. Means what? Money not paid. Opening balance how much? 16. Ending is 40. Listen to me very carefully. What is the ledger name? This ledger you note it down? No? Write it down. Sir, everything you erase, what to write down? Memory இருக்குல்ல எழுதுங்க. If you understood the concept well, you need not see the whiteboard. You'll take it from here. No, it's not there. 16? What is 1640? 160 plus. Okay. Opening balance was 140. Current day sale is 40,000. Closing is 180. That is one example I gave you. In one case, I had brought on balance 140. Current year credit sale 40. And closing balance 180. So this 40,000 was reversed because it is credit sale in the current year. Second example, I told you 140 is opening balance and this money is received in bank 140. So cash inflow. So you have to add this in the operating activity because it is money received. And this is not there in the net profit before tax and extraordinary item. So you have to add it. And what is your sale here? Entire 180 was sale. And this is your closing balance 180. And since this is income earned but money not received, you have to minus it. So this is inflow and this is outflow. So net flow is 40,000 outflow. That's why we're minusing 40,000. Explanation will be given only one time only for this question. Next question on this, I'll do directly increase and decrease. Only one question for logical understanding. Yes, boss. Second case, what is opening balance karna? 140. Generally, have you seen any bill which is valid for more than 12 months? Which means this 140 bill would have been matured during the year. Money would have received. When the money is received for the bill matured, what is the entry? Bank to bills receivable. See in the bills receivable account, buy bank 140. So opening 140 and buy bank 140, the closing balance should be 0. But closing balance is 180. How? Current year sale is 180. Now, this is income earned, money not received. There is no cash inflow, but still it is there in the net profit. To remove, what am I supposed to do? Minus 180. And this 140 is money received, cash inflow. Is it there in the net profit? No. To add, what am I supposed to do? Add 140. So what is the net difference? Minus 40 is what I am subtracting here.
So this 1,40,000 you're adding, sir.
It is cash flow from operating activity. It is not revenue from operation. It is last year revenue, but current year money received. So cash flow statement, we want total money received in the current year. No? Cash flow statement means what? I want to know from the operating activity from where all the money came in. I want the source of money coming in. So this 140 is the source of money coming from the operating activity. You have the habit of what? Recording a difference amount. So you never thought that how this 140 is coming into picture. You have to think, no, this 140 is also receipt of money. Current year inflow of money. So all the inflow and outflow needs to be totally captured. So technically speaking, the second method is correct. Writing this is wrong. So debtor 1,80,000 rupees is nothing but reversal of income as there is no flow. And 1,40,000 rupees is basically cash inflow of operating activity. So what is my net flow? 40,000 is net flow. This is actually the right approach. Second method is the right approach. Understood? Can I go to next point? Now next point is what? Outstanding expenses. Please tell me outstanding expenses, current asset or current liability? It is liability because I'm yet to pay the money. Expense incurred. Outstanding expenses means expense incurred but money not paid. I'm yet to pay. When will I pay? In the future. So the 16,000 rupees is the closing balance of the last year, which is the opening balance of current year. So balance brought on how much? 16,000 on credit side. All the liability will have the credit balance. Opening coming on the credit side. Closing is how much? 40,000. Same logic. Guys, will you keep the amount outstanding till the end of the year? No. So obviously, this is the outstanding what? Rent. So this was the March month rent outstanding. When did you pay? April month, next year. So what is the payment entry? To bank how much? 16,000. So technically ledger is closed. But still you have 40,000 here. How? Because current year March month expense was due but not paid. How much is rent? 40,000. So by rent 40,000. Now listen to me very carefully. This buy rent is included in your other expenses. Means what? This is deducted from your total income. If this 40,000 rupees is deducted from my total income, then in my net profit also this would have been deducted. But when this was getting deducted, was there any cash outflow? No. So to cancel the minus impact, we have to add back. So add 40,000 rupees because non-cash expenses. Any problem? Now, this 16,000 rupees is the cash outflow. This is cash outflow. Cash outflow should have been subtracted. Did you subtract the 16,000 rupees from the net profit before tax and extraordinary item? No. Because in the P&L, we never record the cash outflows. In the P&L, we record only current year expenses. This 16,000 rupees is last year expenses. So this 16,000 would have been in the last year's P&L. In the current year P&L, this is not there. Which means the net profit what you took from the current year, in that the 16,000 is not subtracted. But since this is cash outflow, we have to subtract now. So minus 16,000, which is cash outflow of outstanding expenses. So what is your net flow? 24,000 is positive. We have to add. So now when the current liability increases, what are we supposed to do? Add. So current liability from 16 it increased to 40,000. So increase in current liability, add. Logic behind that I've explained. In this you have any doubt, please ask me. So here outstanding rent 40,000 added means reversed since it is non-cash. I have not paid this 40,000. This current year expense incurred but money not paid. But it is there in my net profit subtracted. So to cancel subtraction I have to add back. So 40,000 added. And 16,000 rupees is the cash outflow paid. Hence we have to minus it. Cash outflow we have to minus it. So net how much will you minus? So net how much will you add? Net impact is 24,000 to be added back. Net impact I have to take. Any problem? So technically when you take the difference, no, automatically that inflow outflow is adjusted. But there's a reason behind what is the meaning of 40,000 and what is the meaning of 16,000. If this is understood, can I go to next point?
Yes,
Anybody still having a doubt in the outstanding expenses part? Anybody is having a doubt why this is coming as opening balance, why this is closing balance, why this is rent, why this is paid? Anybody's got conceptual doubt? If this is not clear, no. The provision for tax which I'm going to take in next class, that will also bounce back. Because all this is based on the same concept. The debtor ledger what I prepared earlier, which is this second ledger. This outstanding expenses ledger, prepaid expenses ledger, provision for tax ledger, everything is working on the same lines. If this is not understood, that also will be difficult. So in this, if you have any doubts, please ask me now itself. No doubt?
No, sir.
Online people, no doubt? Smriti, what happened? What doubt?
No, sir.
You did like this? In my class, there's nothing called as doubt. Rent of current year March month but not paid. Expense incurred but not due. So as per your accrual concept, since expense is incurred, you would have recorded this in your other expenses. You would have subtracted in other expenses. But did you pay any money for that? No. So in your net profit before tax and extraordinary item, that 40,000 is coming after minusing. But there's no cash outflow. So you have to reverse by adding. Now, prepaid insurance. Before that, one very, very important question. All of you, please listen to me very carefully. Am I a good teacher?
Yes, sir.
No? No. Smriti is thinking. Okay, now prepaid insurance. Prepaid means what? Insurance money paid in advance. Paid in advance. 14,000 rupees prepaid insurance beginning they're telling. 12,000 rupees prepaid insurance current year they're telling. What does it mean? Now, this is previous year. I'll take 15 minutes from here, 15-20 minutes max. Those who can leave, want to leave, can leave, no problem. Previous year, guys, previous year, 14,000 rupees prepaid they're telling. What does it mean? Sir, 14,000 rupees is paid here for the service that I'm going to take from the insurance company in the current year. One more time, listen to very carefully. Here, I'm celebrity here. Look here. I'm telling 14,000 paid in the last year. In the previous year, when this 14,000 was paid, what is the journal entry? Sir, to bank 14,000 rupees because money went out. Now, can I record this 14,000 as expense of that year? No. Why? Because the benefit of this is going to come to me next year. Matching principle says what? Record this 14,000 as expenditure in current year only if you receive the benefit in current year. Are you receiving the benefit in current year? No. So when are you receiving the benefit? Next year. So this entire amount in the previous year would have been your prepaid insurance account debit 14,000 to bank 14,000, which means in your prepaid insurance account last year to bank 14,000 is coming. Do you agree with me? Carried on balance 14,000. Brought down balance also is 14,000. So as the brought down balance coming? Debit side. So here if I record to balance brought down 14,000, do you have any problem?
No, sir.
Do you have any problem? Online people, do you have any problem?
No, sir.
No, sir.
Now, accrual concept says what? Matching principle says what? In the current year, did you receive the service or not? Yes. If service is received, benefit is received, record your expenditure. Record your expenditure. So now, this prepaid is currently in debit. I have to cancel prepaid because in current year it is no longer prepaid because money is paid, service also received. Money paid last year, service received current year. Service received current year means record expense in current year. So what is the entry? Insurance expense account debit to prepaid. So prepaid what you have created by debiting, we're cancelling the debit by giving a credit. So to prepaid insurance 14,000 and this is transferred to your insurance expense account 14,000 which is going to your P&L further. So current year in the prepaid insurance, if I record two insurance expenses, do you have any problem? Sorry. By insurance expense, if I record any problem. So by insurance expenses, or I can call this as P&L also, 14,000 rupees, which means this 14,000 which is paid in the last year, recorded in the current year P&L as expense. If I'm recording this 14,000 rupees in the current year as expenses, I am saying this is included in your other expenses of the current year. I am telling that you passed this entry when in the current year as what? Insurance expenses to prepaid insurance. And then what is my closing entry? P&L account debit to insurance expense. So this 14,000 is recorded in your current year P&L. Where in the current year P&L? Insurance expenses, where do you record? Out of the 7 expenses category, other expenses category, which means this 14,000 is subtracted from my current year profit. From the current year profit is subtracted. Subtraction is okay in cash flow statement had I paid money for it. This 14,000, did I make any payment in the current year? No. There's no cash outflow in the current year. So this 14,000 needs to be added back. This 14,000 needs to be added back because there is no cash outflow. So here add back 14,000 rupees. Add 14,000 because it is a non-cash expenditure. Do you agree with me? Any logic? Any logic required further? Digestible. Now, technically the ledger should have been closed. But at the end, we have a ledger balance of 12,000 rupees. So closing balance is coming. To balance cat down, 12,000 is coming. And they're telling this is prepaid. Which means in current year also, you have made a payment of 12,000 somewhere here, where the benefit of this is going to come in the next year. 12,000 paid in current year. What is the journal entry for this? Since the benefit is not received in current year, it is not my expenditure of current year. So this is going to be my prepaid insurance. What is the nature of this? Asset. What is the meaning of asset? Sir, anything that I receive in future is asset. So 12,000 worth of service I'll receive in next year. So until then, this is my asset. And since money is paid to bank 12,000. My question is this 12,000 included in your P&L?
No, sir.
No, because this is gone and sitting where? In your asset side of balance sheet. But did the outflow did not happen? So outflow happened. Insurance is a part of your operating business and cash outflow is there. In the net profit before tax and extraordinary item, this 12,000 is never subtracted in the current year. Because this 12,000 will be recorded as expense when? Next year P&L. So this will be subtracted in next year's net profit before tax and extraordinary item. But in current year's net profit before tax and extraordinary item, this 12,000 is not subtracted. But we have to subtract, why? Because this is cash outflow. So minus 12,000. It is the cash outflow. So what is my net flow? Positive 2,000, which is my non-cash expenses. Add 2,000. So add 2,000. Prepaid insurance. Prepaid insurance asset from 14 became 12. 14 became 12. Increase or decrease? Decrease by 2,000. So decrease in current asset, we have to add. Hence added. But what is the logic actually? In that 14,000 rupees we are adding because it is non-cash. And 12,000 we are subtracting because this is cash outflow. So what is my net flow? 2,000 rupees is my net flow. As this is current year expense paid in previous year. It is paid in previous year, but it is subtracted from the current year expense. So you have to cancel that subtraction by adding. And minus 12,000 cash paid in current year for next year. Any problem? How much it is? Plus 2,000. Wait, now one more item is baki. Inventory. Opening stock 140, closing stock 180. My question goes to all of you. In the trading account, to opening stock, what you record is 140. By closing stock, what you record is 180. My question goes to Manikam. What is the nature of this opening stock which is recorded in the debit side of trading account? Nature: income, expense, gain, loss, asset, liability, capital. This is a trading account. The debit side, correct. So what is the nature of opening stock? Income, expense, gain, loss, asset, liability, capital. In the debit income, opening stock. Chuma guess. Expense. Closing stock, nature. Okay, why is this income? Anything you can think of? Closing stock means what? 1,80,000 worth of goods, which is yet to be sold in the business. If I record closing stock, will my gross profit increase? If I don't record closing stock, there will be one gross profit. If I record closing stock, will my gross profit increase after that or decrease? If I record closing stock, what will be the impact on the gross profit? Hey, closing stock is on the credit side. Credit side means it will increase. Do you agree with me? If profit increases, tax will increase. Correct? Tax put then why closing stock is coming? Genuine question then. Okay. Others. What is the meaning of this opening stock? What is this opening stock?
Expense.
Why this is expense? Opening stock 140 purchased last year. But this 140 was thrown out in the last year, telling that this 140 did not contribute to the income of last year. So this 1,40,000 worth of goods is contributed to my current year sale. So now it is qualified as expense. So opening stock is asset as long as that opening stock is there in your godown. But the moment that is sold, that becomes your expenditure and you pass a transfer entry to the trading account. Correct? Now what is this closing stock nature? Reversal of expenses. Which means in the purchases, we had that expenses which did not contribute to this revenue. So matching principle says that I will not allow such expenses to be recorded in the purchases. So hence to reverse the purchases, we are recording closing stock on the credit side. So the nature of this is not income. This is reversal of expenses. Reversal of expenses. Clear this point? Now, Opening stock is 140. Closing stock is 180. Let's come from the point of view of your change in inventory. When I do change in inventory, it is opening stock minus closing stock. If opening stock is more than closing stock, it is expenses. If closing stock is more than opening stock, reversal of expense. Now, opening stock is how much? 140. Closing stock is how much? 180. Difference is how much? Closing stock is more than opening stock. It is reversal of expenses. So this 40,000 minus 40,000 is got what impact on the net profit before tax and extraordinary item? This minus 40,000 is reversal of expense. When the expense is reversed, profit is increased. Reversal of expense. If expense reverse now profit will increase. Profit will increase. Correct. For this profit which is increased, did you receive any duddu?
No, sir.
Did you receive any cash inflow? No. But this is added to your profit. Please understand. Opening stock is 140. Closing stock is 180. So closing stock is increased by 40. So whenever the closing stock, net closing stock is increased by 40, the gross profit will increase. If the closing stock increases by net amount of 40,000, what is the difference between both? Opening stock 40, closing stock 80 means currently a further purchase of 40. So overall reversed. So if I take the net difference, what is the net difference? 40,000, what is the impact on the profit? This is the net impact of increasing the profit. So this is included in your gross profit, I'm telling. This 40,000 is included in your gross profit. So is it right? Because if this include my profit, it is included in my net profit before tax and extraordinary item. For that, did you receive any money? No. Hence, we have to minus 40,000 rupees. Now listen to me very carefully. From 140, it became 180. Increase in current asset. Increase in current asset means what? Increase in current asset means less. So inventory 40,000 less. Why 40,000 less? Because this is included in your profit. And for that, there's no cash inflow. When there's no inflow, why should I include? Remove it, minus. One more time. Listen to me very carefully. $140 is my opening stock. Do you agree with me? 1,80,000 is what? Closing stock. Opening minus closing is how much? Minus 40,000. I said whenever the closing stock is more than opening stock, it is what? Reversal of expense. Because opening stock is expenses and closing stock is reversal of expense. Means to the extent of 40,000 rupees, you have reduced your expenses. If expense is reduced, your profit have been increased. You agree with me? I'm explaining from one point of view. Which point of view? Change in inventory point of view. I can explain this from trading point of view also, but that is a separate view. This I'm taking as a separate view. Both views I'll give you. As per my change inventory concept of schedule 3, opening stock is 140, which is nature expense. Closing stock is 180, which the nature is reversal of expense. Are you able to understand this point? Now, 40,000 worth of goods, net 40,000 is my net what? 40,000 is what? Net expense minus reversal of expense. What is my net impact? Net reversal of expense. When my expense is reversed, what will be the impact on the profitability? If I record expense, profit decreases. If I reverse expense, profit will increase. So this is having an impact of increasing my net profit before tax and extraordinary item, which means I'm telling you that this 40,000 is currently included in the net profit before tax and extraordinary item. For this, did you receive any money? Did you sell the goods? Did you receive the money? No. Hence, there is no cash inflow. So this I have to minus. So 40,000 rupees I have to minus because this is included in this net profit. So to minus the impact of that, to reduce the impact of that, what am I supposed to do? Minus. Reversal of expenses has the tendency to increase your net profit before tax and extraordinary item, which means this 40,000 rupees is added to your net profit before tax and extraordinary item. For this, did you receive any cash inflow? No. Had you received the money, let it be included. I have no problem. But did you receive? No. So can I let that be included in that? No. So I have to minus this 40,000. Any problem in this? Online people, any problem in this?
No, sir.
So now this 40,000 rupees is been subtracted from your increase in current liability. In the segment is subtracted. Do you have any problem in this?
No, sir.
Are you able to digest the point? No.
Yes, sir.
Sir, if the opening stock was more than the closing stock, then what it is mean? Let's say opening stock is 180, closing is 140.
Expense.
Opening stock is 180, closing is 140. This is expense. This is reversal of expense. So what is my net expense? 40,000 rupees. So this expense has been reducing from your net profit before tax and extraordinary item. Did you make the payment?
No.
How do you know did you made the payment? How do you know how do you know whether you made the payment or not? Tell me. Sir, the payment of this has been dealt with in the creditors account. So outflow inflow of this inventory is been routed in the creditor account. So here we assume there is no outflow happened. Had the outflow been happened, they would have been taken care in the creditors ledger. So here we assume in that case the payment is not done. So 180 is expense. In that, how much have you reversed? 140. So extra 40 expense is booked in your accounts, which means the profit, my net profit is reduced by 40,000. Payment is not done. Hence, we have to cancel the minus item by giving a add back. So if my inventory decreases, current asset decreases, I need to add back. If my current asset decreases, we have to add back. Sir, if the payment has happened, what to do? If the payment has happening in the balance sheet, this one item called as current liability. That current liability will take care of the payment part. Am I loud and clear? Any problem in this? Now, just because I told that you have to become a pro in accounts, you have to learn everything conceptually. Some people have a problem. Every time then they come across this current asset and current liability, they sit and think. You think I have no problem. But after your inter exams, after you complete your inter, till you die, you have so much of time to sit and think about everything. But some people have the habit. No, sir, unless and until I understand why this add and minus is happening, I will not write inter exam. Like that, don't do it. I had one friend of mine when I was studying. That ghosty fellow was like that only. If I don't understand what this is, why this is, I will not study. I will not further travel. He will sit and do all the research. He cleared 2 attempts, 3 attempts later than me. Because by the time he understood that, you cannot clear CA that way. So how much important is learning concept? That much important is to be practical. Because time is less. So conceptual learning is one part. That also you have to take care of. To some extent. In another aspect, time is also crucial, which is very less. So within that time frame, doing the concept and finishing the chapter subject is also equally important. So both needs to be practically dealt with. Am I loud and clear? Now, coming back, how much was this inventory? 40,000 subtracted. Let's come back and continue with this question. So if you look at the operating profit before working capital changes, it was 160. So if you add 24,000 plus 2,000 minus 40 minus 40, what is your cash generated from operation? 1 lakh? 6,000 is cash generated from operation. Now, after this, you have segment 4 and segment 5. Then, after adjusting segment 4 and segment 5, you get cash flow from operating activity. In this question, we don't have any segment 4, segment 5. So, this itself becomes cash flow from operating activity. Any problem in this? So 1,06,000 rupees becomes a cash flow from operating activity. Is it loud and clear? Question 25 will be homework. What is the homework question for you? 25 is homework, no doubt. 25 is a homework. This PDF is already shared in group. 26 I will do in the next class. 27 homework. 28 I will do in the next class because it's got provision for tax. 29, 30, 31 you will do. 29, 30, 31. Any problem? Any problem? You want me to repeat one more time? Homework question is 25, 27, 29, 30, 31. Take 34 also. 34, but wait, don't do now. 34, do it later, but put it as homework. So 25, 27, 29. 25, 27, 29, 30, 31, 34. So in my next class, my target will be to complete segment 4 and segment 5. And definitely time will be left over. In that, I'll also do questions based on investing and financing activity. But I'm thinking before I do investing activity fully, I should do a recap of how to prepare the depreciation account, accumulated depreciation account, machine account, etc., because that is one very tricky part in this intermediate. Because in this, you have the adjustment, which is above and beyond what you studied even in 12th and foundation. So definitely, I'm not going to test that tricky concept in the next class. That I'll do in the right time comes. But next class, I'm going to recap the basic part first. So next class, my target is to finish segment 4, segment 5, depreciation adjustments, investing, finance. So let's say by next class, if you're done with it. So next class is when? Thursday. Saturday, we can start off with the big questions from this textbook. Sunday, we'll start the big question from ICA module. So I think in 4 classes from there, that is Sunday, Tuesday, Thursday, Saturday. By next Saturday, we should be done with cash flow statement. Are you clear with the roadmap? So I'm trying to set a base. So 2 more classes to set a strong base for cash flow. Once that is set, all the 14 questions of ICA module will rocket. Okay, no? No energy. Okay. No. Chalo people, let's wind up. That's all from my side for this session. I'll see you on Thursday, 5 p.m. sharp. Until then, bye-bye. See you. Take care.